to meeting number 35. It's the first panel of the House of Commons Standing Committee on Finance for today. Pursuant to the order of reference from the House, we are meeting on the government's response to the COVID-19 pandemic, and today's meeting is taking place by video conference, and the proceedings will be made available via the House of Commons website. We are fortunate to have with us today Export Development Corporation, and I'll introduce the guests, Mr. Laverty, President and Chief Executive Officer, Mr. Burlock, Executive Vice President and Chief Business Officer, and Mr. Winterhalter, Senior Vice President, Communications and Corporate Strategy. So you have approximately 10 minutes to go. I guess, Mr. Laverty, the floor is yours. Welcome, and we'll turn to questions after your presentation.
Committee Chair Easter, thank you for that welcome. Thank you for the opportunity to speak with you today. Export Development Canada is uniquely placed to understand the struggles of so many Canadian businesses today, and we're privileged to be positioned such that we can make a real difference helping Canada through this crisis. I'd like to use the next few minutes to help you understand more about what EDC has been doing to help, and to describe some of the tools we're employing to help thousands of Canadian companies survive this crisis, to be ready for the recovery, and to return to growth when that happens. EDC is Canada's export credit agency. In 2019, we served almost 17,000 customers, close to 90% of these being small and medium-sized Canadian companies. We've helped facilitate $102 billion in Canadian business in 147 countries around the world, thus contributing to about 500,000 Canadian jobs. Our business, the business of EDC, operates on commercial terms. That is to say, we do not provide grants or subsidies. And at the heart of our business is risk management. Our core product offering is a set of financial solutions and knowledge products, which give Canadian exporters of all sizes, their supply chains, and their bankers the confidence to move forward with international sales. EDC can insure exporters, for example, against a foreign customer's failure to pay. Our bonding and loan guarantees are another form of risk management, giving financial institutions the confidence they need to furnish exporters with the working capital or to secure the cash flows necessary to pursue international opportunities. Another way EDC helps is by direct financing of deals and international projects. It's also worth noting that a large portion of our business is delivered in partnership with Canada's financial institutions and private insurers. In this regard, EDC is a public sector partner for private sector growth, promoting the success of thousands of Canadian exporters. So that's EDC's role under normal circumstances, but today it's far from normal. EDC is proud to be part of the Government of Canada's response to the pandemic and its economic consequences. Our 1,700 employees, all working from home, are working hard to find new ways to serve Canadian companies. We have been helped in this by Parliament's decision to grant EDC an expanded mandate, which has freed EDC to leverage its full suite of tools in support of non-exporting companies. Our immediate reaction to the current crisis has been to help our existing customers first, implementing payment deferrals for our financial programs, dispersing liquidity under previously negotiated credit facilities, and paying insurance claims in advance of waiting periods. We have also made our solutions more accessible, expanded our risk appetite, and continue to be agile to the needs of Canadian companies. Our knowledge products have also provided much needed guidance during the crisis. 3 COVID-19 related webinars attracted more than 10,000 registrants, over 60,000 visits to EDC's webpage, and we have also contributed to another 23 virtual events with industry associations and partners, sharing with them details of available programs. We have also produced a web-based triage tool to point Canadian companies to COVID-19 resources across government. But beyond our core business line, EDC has also collaborated in the design and delivery of two new Team Canada programs, the Business Credit Availability Program, or BCAP, and the Canada Emergency Business Account, CEBA. EDC currently offers two forms of BCAP financing guarantees. In simple terms, a guarantee is a promise made by EDC to a company's bank, co-op, or credit union to repay all or a large portion of that institution's loan to a Canadian company. EDC's BCAP guarantee, launched in late March, is geared primarily to small and medium-sized companies, supporting loans to a maximum of $6.25 million, with a guarantee of 80%. Our second guarantee is called the Mid-Market Guarantee and Financing Program. It offers expanded support for medium-sized businesses, companies earning revenues between $50 and $300 million, and supports loans in the $16 million to $80 million range with a guarantee of 75%. Our first BCAP guarantee was designed to get liquidity quickly to smaller companies with limited financing sources. While the initial uptake has been slower than anticipated, the pipeline is significant, and we anticipate greater demand through the summer and into the fall. EDC is now working with more than 120 commercial financial institutions across Canada to deliver this program. Early feedback from customers and bankers shows a common theme. Small business owners today are reluctant to take on additional debt. This is primarily due to the uncertainty of the timing and the nature of the recovery. They have, however, signaled more openness to the program when their future costs and customers are better understood. With this feedback, we have changed the tenor of the guarantee from the initial 2 years to 5 years to provide to Canadian companies a longer repayment horizon. This appears to have worked. Our banking partners are currently processing more than 400 loans with supporting EDC guarantees. We will continue, of course, to monitor the program and its parameters. EDC also helps deliver the Canada Emergency Business Account. Our role in CEBA is a supporting one, working with Canadian financial institutions by providing funding, validation checks, and administration. Since its launch, the Enhanced and Expanded program has delivered over $26 billion through 233 financial institutions, providing essential liquidity to more than 660,000 companies. Now, while the BCAP and CEBA programs remain our priority, our core business offerings continue to have an important impact for Canadian companies. Our accounts receivable credit insurance is helping companies remain competitive, giving them access to working capital without taking on additional debt. Through March to May of this year, EDC signed 218 new policies with another 215 policies pending, compared to 99 policies in the same period last year. This represents a fourfold increase and an increase in just 8 weeks of more than $1 billion US in risk exposure in support of sales for more than 3,000 Canadian companies. On the bonding side of our business, to date, our solutions have helped support $3.8 billion in trade, a year-over-year increase of 81%. Further, in our financing program, we have issued 25 commitments and 17 offers valued at US dollars 3.8 billion, directly linked to providing support for companies impacted by COVID-19. And what these numbers demonstrate is the counter-cyclical nature of EDC. When crisis threatens liquidity and elevate risk beyond the tolerances of other market players, EDC is able to lean in, mitigate risk, and deliver that liquidity. EDC is but a part of a large coordinated Team Canada effort to sustain our nation's economy during this crisis. Global Affairs Canada, Finance Canada, Innovation, Science and Industry, and so many other agencies through government are working side by side with EDC, BDC, and our financial institutions. This effort has required agility and creativity from each and every member of the team. I'm proud of all of these efforts, not just our own at EDC. I believe that the steps we are taking today will sustain Canadian companies for recovery and return to growth. Of course, I look forward to the day when EDC's focus will return to its original mandate of helping Canadian companies go, grow, and succeed internationally. Until then, we remain dedicated partners in helping serve all Canadian companies in this extraordinary time of need. Thank you for the opportunity to lend our voice to this important conversation. And my team and I look forward to answering any questions you may have.
Thank you very much, Ms. Laverty. And we will now turn to 6-minute round. I'll give you the list of the order, folks. Mr. Cummings first, then Mr. Fraser, Mr. St. Marie, and Mr. Julian. Mr. Cummings. Mr. Cumming.
Good afternoon, and thank you for appearing today. And I do agree that you have the potential to really add some value to the business community. I want to start with this relationship with the CEBA loans. We've been prodding for some time now with the changes that were proposed several weeks ago, and we have business after business after business asking us when those changes will be implemented. Can you shed some light on this as to a date when businesses can expect those changes being put in place?
Todd, would you like to respond?
Thanks, Mairead, and thanks, Mr. Cumming. Yeah, so we are now entering into version 3 of the CEBA program, as you point out. So first version was launched in March, and then subsequent amendments to that to CEBA 2.0, which expanded the eligibility in April, and the third version, which I believe is the one you're referring to, which will look at companies with a payroll of $20,000 or less from 2019, or who have non-deferrable eligible expenses from that same period to allow them to qualify. And EDC, as agent for the government on this program, is working currently with all of our financial institution partners, about 230 of them at present, to make sure this rolls out in the very near term. And currently we're working for a delivery date of June the 15th.
So what's the holdup? Because the concerns that I'm hearing is, you know, granted that the criteria is different, but there could be an attestation around that criteria. So no one understands why is it taken now. That will be over 3 weeks from date of original announcement. Because as you've heard from many of these businesses, they need certainty, they need the cash, and every week puts another person closer to bankruptcy.
Thank you for the follow-up. Yes, indeed, I think everyone is working very stringently and as quickly as possible to get us through to that solution. Again, when you're working with north of 230 financial institutions, many of whom have different platforms, different programs, the desire to get this out as quickly as possible in a considered and a consolidated way, so it's standardly delivered across the country, has just taken the time it has to this point. The team is confident that we are moving to be able to deliver on that through our financial institution partners, as I say, as early as the beginning of next week.
And what's the total allocation that the government's put forward for the CEBA loans, and what kind of headroom do you have left?
Thank you. So yes, we're currently at a $55 billion notional cap for the program. As of noon today, we have dispersed $26.2 billion. So there's roughly $30 billion in headroom from the notional cap of the program. But certainly that is something that we would be open to kind of consider negotiating an increase should that prove necessary.
So I want to move up to the BCAP funding and the loan guarantees. Can you tell me how many actual loan guarantees have been granted since March?
Who's taking this one? Miss Laverty or?
Mr. Burlock will take this question, Committee Chair. Thank you.
Good. Mr. Burlock.
Good. Thank you, Mr. Cumming. To date, we don't have a number that we can report. We are getting periodic reporting, and by the end of the week, we will get a report on actual guarantees signed. What I can tell you is this, in terms of the BCAP guarantee, we have 120 financial institutions that we're working with that are implementing the guarantee or have implemented the guarantee in their systems. We have over 2,000 Canadian companies that have registered their interest and eligibility with us. And the institutions that we're working with tell us that they currently have about 400 applications going through the approval process. So as we start to get reporting on signed applications, we will be able to come back and confirm numbers, hopefully as soon as the end of this week.
So given the size and scale, it's very small.
I think what we've seen, and we've done some sounding with the institutions, we've done some surveying with some of the companies that have registered with us. And what we're seeing is that a number of companies that had shown interest in this BCAP solution went to some of the other government solutions that were available, the wage subsidy, the CEBA. And what we're hearing is that as companies were looking at what was happening in the economy, they were hesitant to take on debt right away. So now we have a program that is ready and stood up. It's in 120 financial institutions, and we believe that as companies gain confidence and they start looking at debt solutions, that with an 80% guarantee behind the financial institutions, we will see more flow. And with 400 in progress now, we're starting to see some of that flow. So those are the facts that would explain perhaps what the decisions are that companies have made in terms of the types of programs to use initially.
Time for a quick one, James.
So from date of application to approval or actual approval of guarantee, what kind of time frame, and have you added staff to deal with the additional requirements that EDC is now under?
Yes, we do have the staff necessary to deal with what's coming through on these guarantees. And in fact, part of what we've done is work very closely with the financial institutions to put in a streamlined approval process so that we could run these at scale. So we're confident that we're going to be able to deliver for Canadian companies.
Okay, we'll turn to Mr. Fraser, who will be followed by Mr. St. Marie. Sean?
Thank you so much, Mr. Chair. Thank you to our guests for being with us. I actually was going to go down a very similar path as my colleague, Mr. Cumming, did on the timing issue. From your testimony, I take, or when I first look at the numbers, I would have said the same thing. It looks like a fairly limited early uptake, though from your testimony, it makes clear that, and frankly, from the business owners I've spoken to in my own community, there is a real frustration with the sense that debt seems to be one of the only options available in certain circumstances. I think you eloquently outlined the fact that for perhaps personal income, business owners were going to the CERB. For fixed expenses like utilities, CEBA seemed to provide the fix, the wage subsidy for wages, and so on. And I do think you're right to say that business owners are availing themselves of these other potentially more generous measures first. So there's a great difference between the time of application, I take it, and the time the program was open, because business owners need to figure this out for themselves. I'm curious, though, what information are you relying on when you say you sort of project this to pick up? Like over the summer, do you have numbers you're looking at that you anticipate to see in terms of what would look like success?
So, Mr. Easter, perhaps I can take that one. So we did participate in what's called a BCAP steering council, which includes the members of commercial banks, the heads of small business banks at most of the major financial institutions, together with the Credit Union Association, etc. And we use that forum to actually help guide us and give us not only the data on what's coming through the financial institutions, because that's really where the loan must originate from, to give us some qualitative data on what they see coming through, but also to talk to us about what they're hearing from their customers. And when I talk to them and when I reach out to Canadian companies, what they're telling me, job number one was to reduce their operating expenses whatever way they possibly could. So the first thing their bank told them was to reduce their operating expenses and really make sure that they were managing their own expense profile. Then job number two was actually sitting down with their bank and looking at what they could do with their bank specifically. So many of the banks have issued waivers, consents, adjusted the payment profile of some loans. And all of this was done in the context of not understanding when the economy would open up. So back in March, many of the companies we talked to were planning a 3-month assumption as to when they would see the economy opening up. And as things got worse, they weren't really sure that that was the assumption that they should plan under. So now what the banks are telling us is that the companies perhaps have line of sight to the economy opening up. They're starting to understand what would they need to do with their inventory. They may be recalling employees. They have a better understanding of their costs. And equally, they may be talking to their customers about when orders will be coming in. So starting to build those scenarios and understanding their business is then allowing them and starting to build the confidence about, can I take debt on and how long will I repay that debt over? So it's truly been,
Sure.
I would say, different reactions at different times.
Just very quickly, one of the things that keeps coming up when I speak to business owners locally, we tend to call it liquidity in Ottawa on this committee. We tend to call it money at home. Businesses are running out of money, and there's a short-term and a medium-term crunch. I think in the long term, people have faith that Canada's strong enough and we're going to get back on our feet. 5 years from now, everyone's optimistic the economy will look roughly like it would have looked had this not happened. The intervening period could come with a lot of pain if we don't have an effective policy response. It sounds like some of the programs that you're discussing today are great to solve the medium-term liquidity crunch, but while we're waiting for a $6.25 million loan or a wage subsidy for that matter, do you have advice on what kinds of programs would support those businesses that are just trying to get that bridge period between now and when these bigger allotments of fund to help with their liquidity or money actually comes in?
Yes. So in fact, we encourage companies to go and to be talking with their financial institution. That's their primary partner. And for all of these companies, they have a financial partner. We encourage them to reach out to their associations who may be able to help them more quickly triage different programs that are available, either federally, provincially, municipally. So there are many different programs available. And actually understanding all of that is some of the challenge that small companies face is actually, where do I turn to next? So we encourage them to work with their existing financial institution. In some instances, that is EDC. So I mentioned credit insurance in my opening remarks. That's not a debt solution, but it is a solution that's recognized by the banks in helping with working capital needs. And it ensures that companies get paid for the products that they are actually putting out into the market. So there are other mechanisms. And honestly, at this time, working with your financial institution is the best way to understand what's available to you.
Thank you, Mr. Chair. I assume that's my time.
It is, unless you get a very quick one.
You know, I'm okay. I'll pass it on to our next question. Thank you.
Okay, Mr. St. Marie, followed by Mr. Julian. Gabriel?
Oui, merci, Monsieur le Président. Donc, merci.
Thank you, Chair, and thanks to our guests for being here with us at our committee meeting this afternoon. I have some questions about the mechanics of all this for the CEBA and the BCAP. For each of these programs, you're guaranteeing the loan, or are you giving the funds to the financial institution? Are you advancing the funds directly?
Go ahead,
Carl, please.
Mr. Burlock.
Oui, merci pour votre.
Yes, thank you for your question. As for our role with the emergency business account, well, we are administering the program for the government. We have organized the documentation, working with the financial institutions to ensure that the funds are funneled to financial institutions based on the standards that are set out in the program. That's our role. As for the bond or bonding program, the commercial guarantees, we are the guarantor. Financial institutions will approve a loan, and EDC guarantees 80% of the loans provided by the financial institutions. Thank you. All right, so more about the business credit program. These aren't 0% interest loans, right? If you were to compare them to other loans on the market, are they under the usual loan rate or are they higher? These are rates that are set by the financial institutions. So these lending rates are market rates, but the EDC backs 80% of the loan, which gives people more confidence and gives the institutions more confidence to provide loans to businesses and ensures that enterprises have access to the credit. So your program is helping, according to the government and by you, according to you as well, by ensuring that financial institutions are available to loan more in this crisis. So it's a loan guarantee program. Have you been able to see out in the field what the result of this is? Your funding partner institutions, have they said, yes, we've been able to provide these loans, but wouldn't have provided them had you not guaranteed them? Is this the sort of thing that you've seen firsthand? Yes, we brought the program in based on surveys and with government as well, with EDC and ESDC and ISED and financial institutions. The aim of the program is to do exactly that, and the standards were worked out to exactly that, encourage financial institutions in partnership with EDC provide loan. So if a business is unable to reimburse a loan, is bankrupt, for example, I understand the EDC plays a role linking the financial institution to the government, such that it would be government funds that would be used to reimburse the financial institution, not EDC's funds. I should make it clear that there are two programs. There's the emergency program, the emergency business account, and that is a guaranteed loan guaranteed by the government. And then the business credit availability program is guaranteed by EDC. It's a loan that is provided by the financial institution, though, so the part that is guaranteed by EDC would be paid back by EDC if the loan were defaulted on.
Thank you. So I imagine that you have to work with hypotheses given what is happening in the economy and it's changing constantly. Have you established a rate of refund or bad debts, and can you share this with the committee, or do you have hypotheses about these? It's a good question. As a risk manager, of course, it's one of our roles to manage our funds well and our commitments as well. I don't have a precise figure I can give you right now, but we could give you some data later. Yes, that would be appreciated. When you can, please bring those data to the committee. I see that the chairman is telling me that I'm almost out of time. I'll stop here and I'll ask you another question later in the second round of questions.
Thank you, Gabriel. And from New Westminster, Mr. Julian, who will be followed by Mr. Cooper. Go ahead.
Thanks very much for our witnesses for being here. We hope your families are safe and healthy. I'd like to continue on lines that Mr. Saint-Marie was speaking on, particularly around the BCAP. I'm very interested in that. I gather from the 400 applications that none at this point have actually made their way to the EDC. So at this point, you have nothing to report. Is there any provision for loan forgiveness in this program? And what is EDC's charge either to the business or to the financial institution, either in terms of fees or in terms of an interest rate?
Carl, would you like to provide some details?
Yes, thank you. So the financial institution will provide a loan to the customer at their normal business rate. EDC charges a fee of 1.8% per annum to the financial institution to cover its guarantee percentage. In terms of forgiveness, there is no provision for forgiveness in these loans. As Ms. Lavery mentioned at the beginning, EDC does not provide grants typically, so the loans are on a commercial basis. And I think that your other question, the other part of your question was around what we expect to see. Currently, our sounding with the financial institutions indicates that there are about 400 loans in progress in their systems currently.
Yeah, but none are completed at this point.
None have been reported to us as completed, so we get periodic reporting. So there may be some that are complete that we haven't seen yet, because we will get some more reporting at the end of the week.
In the program, is there any cap on interest rates? I mean, I know you're saying it's normal business rates for the banks, but is there any cap, any provisions on limitations? And what is the average interest rate that the Canada's big banks would be charging those businesses?
I can't tell you specifically the rate that each bank charges. They are their normal business rates. And this program is open to 120 different institutions. So there's an ability for companies to use different institutions for these programs.
Yeah, but I mean, you would have an estimate of the percentage that would go to Canada's biggest banks, right? You would already have a sense of how many of the applications would come through the big six.
Correct.
Yeah, and what percentage of the applications do you expect to have come through the big six?
Well, we would expect that a fairly large number would, given the number of customers that they have and the number of companies that they deal with.
Would it be fair to say a majority?
Yes.
Okay, and there is no cap on any of the rates that they charge, but among the big six, what is your impression of the interest rate that they would be charging, despite the fact that EDC is guaranteeing the loan?
That's a number that we could get more accurately from the big six. I don't want to speak on their behalf. I would say, though, that again, as Mairead mentioned in her opening, the banks have provided deferrals of principal to their companies, to their customers, and we believe they have an interest in providing them additional credit so that they can grow as the recovery starts. So really, that's the basis of this program: is that the banks will want to help their companies recover and grow, and this will help that credit flow by us taking 80%. So that will take some of the risk away from the banks and help credit flow.
And I guess that's my point. I mean, the big banks announced $5 billion in profits so far during this pandemic. They've been showered with the various levels of support, putting aside the EDC. The OSFI estimates it at $750 billion in liquidity supports to date. And so if there is no cap on interest rates, basically the government is socializing all of the risk, but the banks are privatizing all of the profit. That would be a concern, I think, to a lot of Canadians. You mentioned the issue of deferrals. What are the provisions in this program for deferral or interest in kind? That's certainly been a controversy in the LEAF program, where companies, Canada's largest companies, would get monies, but don't actually have to pay interest on that. For folks who have mortgages on their homes, that mortgage deferrals still come with all kinds of penalties and fees and interest charges on top of charges. Provisions in this program for smaller companies to pay interest in kind, or to have an interest-free deferral over a period of a year or two, like with the LEAF program?
So every loan, it will be priced the risk, and the purpose of the guarantee is really to encourage lending rather than to dictate pricing. And in fact, I guess specifically to answer in terms of the ability to do deferrals or interest in kind, if banks are willing to do that, they can approach us under the guarantee mechanism for approval to do that.
Okay, we'll end that round there. We'll start in the second round, 5 minutes. We'll start with Mr. Cooper and on to Ms. Kotrakis. Michael.
Great. Thank you, Mr. Chair, and I want to thank the witnesses from EDC. Back in April, EDC had announced a program to backstop loans for the oil and gas sector. The program in particular was focused on companies that produce 100,000 barrels of oil or less a day. What is the status of that program?
Carl?
Okay, Mr. Burlock.
Yes, thank you. We are in the process of operationalizing that program now with financial institutions that lend to those companies. We have a guarantee developed, and we actually have application documentation now in the market that's available to companies. So the guarantee is very close to being operationalized and used in the market.
So you have application documents that have been circulated, but there is no actual application process at this time. Is that right?
There has not been as of yet. And maybe I'll just add that this type of guarantee is being provided to exploration and production companies that finance themselves based on the value of their borrowing base. And that borrowing base gets redetermined twice a year. So really, we're putting the guarantee in place so that it coincides with the spring borrowing base reset. So we intend to have it ready so that when banks start reevaluating credit, it will be there to help keep liquidity in the sector during this period of stress in the markets.
Thank you. Now, you said that it will be operationalized imminently, and I don't want to put words in your mouth, but that's, as I interpreted what you said in your answer, it's been a number of months now. We're talking about over 50 days since the program was announced. Could you be a little more specific?
Yes, we're working with the banks now and really very close to just finalizing the final details of the processes that will be used to approve the applications and provide the guarantee on the loans. And again, the timing coincides with the redetermination period of the borrowing bases. So that's really the key milestone, is to have the guarantee ready for when the semi-annual redeterminations happen.
Okay, we heard from a witness who came before our committee a meeting or two ago. He represents a large company that is TSX company based in Edmonton. Their company has significant operations in the United States. He indicated that his company brought an application for an EDC loan on March 10th. He doesn't expect that any support will be available until at least the latter part of August. By contrast, he noted that in terms of an application that was brought for similar support in the United States, it was processed and the financing was provided within 5 business days. Now, that's just one example, but that seems to be a striking difference between a matter of 5 business days in the case of the United States versus a months-long process under EDC. And he expressed some frustration. I was wondering if you might care to comment in broad terms on the striking contrast.
Just to interrupt for a sec, Michael, was that with EDC or BDC? I thought it was with BDC.
No, it was EDC.
It was, okay.
And I do have the transcript in front of me.
Okay, good, because I wondered, asking that question myself.
Okay.
Go ahead, Mr. Burlock. Thanks, Michael.
Well, we certainly look forward to the opportunity to hear from the company directly and make sure that we're meeting their needs for whatever it is that they were looking for. But it's hard for me to answer more precisely without having heard from the company.
Surely you're aware that there's been a lot of concern about rules that have been changing, about eligibility criteria that is difficult to meet. There seems to be concerns around issues of red tape. I mean, surely you're aware of these concerns. And what is EDC doing to address them?
Mr. Larry, go ahead. Who's on? Go ahead, Mr. Burlock. Marie, go ahead.
So thank you for that, Mr. Cooper. Of course, we do hear from our customers who would have liked to have seen the program roll out faster than it has done. We've been working very closely with the associations to try and ensure that the support that was specifically needed to help the main drivers of the industry, which was the E&P companies. So it has taken some time to work out the eligibility criteria, to work out the specifics of a very complex guarantee product, as Mr. Burlock said, that's linked to reserve-based lending. So we have been driven to ensure that it's available for the redetermination period. We have been keeping in constant touch with the associations and understand the frustrations of their members, but believe we have a product now that is available at the time we need it. And it is one of the products that we're providing to the oil and gas sector. We should also mention our bonding products, which provide support for letters of credit. And those are products that EDC has always had available and that we have been continuing to issue, and in fact are ahead of this actual guarantee going out into the market. So there's a combination of products, including our credit insurance product, and the RBL guarantee will be there to support during the redetermination period, which is when it's needed.
Thank you all. Just on Michael's question, Mr. Cooper's question, though the individual had indicated that he didn't think the loan would be finalized until I believe it was August. You're saying, Mr. Burlock, that this is practically ready to go now and should roll out. Then how long is the process after that. It does amaze me, not just with EDC, but with so many things in this crisis, that something seems to be able to get done within days in the United States, and it takes much longer in Canada. So when do you think? So when is this available? And then how long is the process after that? Is this guy right that it's going to be August before it gets done?
Yeah, and I'm not sure if it's the same type of support that this company is referring to, but certainly in terms of the guarantee for reserve-based lending, we would work at the same pace as the banks. So as they come and do the redeterminations and renew the loans, we would apply the guarantees. So we're looking to work there at the same pace as the banks and not slow the end result for the customers. So that's been part of the process we've put in place. A little bit of time up front to try and ensure that that we have something that can flow more quickly.
Okay, thank you, Ms. Koutrakis, followed by Mr. Morant. Annie, you're on.
Thank you, Mr. Chair, and thank you to all our witnesses this afternoon. It's nice to see you before the Finance Committee. EDC has commented on some short-term trends and challenges faced by retailers as a result of the COVID. These include a rise in U.S. retails declaring bankruptcy, limited liquidity to produce next season's merchandise, and a decline in demand for consumer products. So far, we've seen a number of short to medium-term solutions for businesses through and including the BCAP and CEBA loans programs. What long-term challenges may continue to exist following the crisis, and what role can EDC play in providing these long-term supports?
Thank you for the question. And yes, we have been public in giving some information by sector and what we see, both in terms of the sectors that have been more impacted through the crisis and then what this means for emerging from the crisis. Without a doubt, retailers have been one of the most impacted sectors. And I think we are seeing some fundamental shifts in retailing. That being said, not all retailing is the same. So we're seeing it much more as it would relate to clothing than we are to food, for example. So there's a very large range as it relates to retailing. I think what we look to when we see emerging from the crisis is where are there sectors that we can help accelerate, and as we roll back to perhaps looking in the longer term at just exporting, then it looks at how can we help companies actually sell their products further abroad. And we have a number of programs that would help companies do that, which aren't just financing products, but actually products that make introductions for them, that help introduce them to foreign buyers, and make connections for them so that they have a place to actually extend their products to. So when I think beyond, well, it's hard for many of us to think beyond COVID-19, but when I think of recovery, it's making sure the companies are strong enough and ready for recovery. It's making sure that they have the working capital that will be needed to build the inventory to actually sell. And then it will be finding ways, other opportunities to expand their reach and help them maybe even do acquisitions to move closer to their customers if that's in another country, or build warehouses, etc. Excuse me. So we have many tools to help Canadian companies diversify. And those would be tools that we would equally be looking to see how the Business Development Bank of Canada could help, the Trade Commissioner's services, and if there was a specific need to look at some sectors, then we would try and put our sector expertise into play as well. So we do see opportunities in terms of food security, agriculture, advanced technology, clean technology, and those are areas where EDC puts some focus to make sure that we're supporting going forward.
So thank you for that. Yesterday, the EDC published a report titled Women in Trade, What It Takes to Succeed. In it, it outlined the underrepresentation of women entrepreneurs in Canada. It was also noted that equal ownership of businesses by men and women would add $2.5 trillion to $5 trillion to the global economy. What needs to be done, in your opinion, to foster greater female representation in Canadian business? And could this greater representation create a source of economic growth following the COVID-19 pandemic?
Absolutely. This is something that we've been talking about for a number of years and really focusing on women entrepreneurship. The difficult answer to hear is there isn't one silver bullet for this. We have to do many different things. So whether that's actually giving women the confidence to declare themselves as a women-owned or women-led business, whether it's creating the networks that they can access and understand the tools that are available to them. So actually building understanding, building awareness, and then ensuring that our programs have no bias in them, and that in fact are very appropriate and deal with the different needs of women as business owners. So, you know, we've gone as far as designing a website page specifically for women because what we had didn't work. That's a very simple example. To a different example, where in our investments program, we actually appointed a lead to look at investing in women-owned, women-led businesses, a woman who can actually work with those entrepreneurs. They feel more comfortable with her and understanding what it is that they need to accelerate their business. I think that's been one of the findings that we've had to, you know, we appointed a lead for the rest of our products as well, to educate, to bring women to the table and to ensure that those products were available. So we're very pleased. We started with a smallish program at $50 million. And that program is oversubscribed, and the level of support that we've seen and the level of interest has been much greater than we imagined. So it's certainly something that we're focused on. And during COVID-19, we launched what we called an investments matching program, whereby if investors were investing in companies, EDC would match their support. And I'm really pleased to announce that we have a number of women entrepreneurs in that list as well. So we're starting to see it coming into more of our mainstream products rather than specifically designed products.
Okay, thank you both. Turning then to Mr. Morantz, followed by Ms. Zerowitz. Marty? Are you there, Marty?
Thank you, Mr. Chair, and thank you for the witnesses for being here today. I had to bring my mic down. Just a couple of questions. I mean, I'm just interested in sort of understanding more step by step how these loans get implemented. Firstly, like when it comes to the underwriting, do you rely on the banks for the underwriting, or do you work with the banks? And do you have your own set of criteria that the banks have to adhere to before you'll agree to a guarantee on a loan? If you could answer that as briefly as possible, because I have a few follow-ups on this topic.
So I will answer quickly. We rely on the bank's underwriting.
So a bank will approve a mortgage application, a loan application, and as long as it's okay with them, you will provide your guarantee.
Yeah, the program is governed by specific legal agreements that set out the criteria, specifically for BCAP. But yes, if it meets those criteria, which are simplified, then we do rely on the bank's underwriting.
And these agreements, are they between you and the banks, or between who sets the criteria under the agreements?
So if it's with respect to our existing products, we set the agreement with the bank. However, for BCAP, there were a number of policy decisions and that we worked with our colleagues at Department of Finance and Global Affairs to ensure that the criteria were well understood and were available to all.
So the underwriting criteria is ultimately from you and the government, and not set at the bank. Is that right? It's described in this agreement you refer to.
So the conditions of the guarantee are described by us in the agreement, but loans themselves are often with the financial institution and their customer.
But presumably the terms under which you provide a guarantee must mirror or reflect in some regard the underwriting criteria of the decision of the financial institution to provide the loan.
Yeah, so what we're setting is the tenor of the guarantee, we're setting the percentage of the guarantee, we're setting the fee, we're setting some conditions related to it, and that we don't want to see those funds being used to repay loans. We don't want to see those funds being used for shareholder payments, etc.
So what I want to just clarify is these guarantees, though, are for the security of the bank. They're not for the security of the borrower. So, you know, if a loan were to default, the borrower isn't off the hook. You would take likely assignment of the bank security like a normal guarantor would and pursue the borrower. And you said earlier there were a number of deferrals that were in place. When we had CMHC before the panel, I asked about that, and they said that the deferrals were going to be capitalized in some cases. Is that the plan, or will, once we come out of the crisis, will borrowers be expected to repay their deferrals, or will the interest be capitalized?
Specifically on the BCAP guarantee itself, or on our existing products?
Either. Maybe the BCAP, if there's a difference. Start with that.
Well, the BCAP guarantee, the loan itself is with the bank for which we're providing the guarantee. And I think, as we said, you know, we're awaiting details from the banks of actual guarantees that have been done. The guarantee was structured to provide a guarantee on additional lending, not on lending that existed or loans that existed at the time of the COVID-19 crisis. So it would be, in my view, unlikely that that's the one that would be deferred, because that would be a discussion like with the bank and their customer.
So when the bank makes a decision to defer a loan, you mentioned that there were deferrals earlier. I assume that they were EDC guaranteed loans. On those ones, does the bank need your permission to do that, or can they just do it on their own?
No, they would need to come to us for some type of waiver on one that is with respect to any of our guarantee products.
And so again, getting back to the issue of the deferrals, if a loan were to default, would you be in a position then, if the deferrals if the loan remained in default, would you ultimately end up executing on the security and requiring the borrower to pay?
I know that you will not like the answer of it depends, but it does depend on the capital structure of the companies themselves. And often we understand where the different loan arrangements themselves fit in the waterfall. So which loans fit? These loans are under COVID-19 are usually additional loans for loans that already exist. So it then relates to the actual ranking of the loans in the capital structure.
Do you need more clarification there, Marty?
Yeah, I'm really simply asking, can there be a situation where a loan goes into default that you guaranteed? Under most cases, a guarantor, if they had to step in and provide their guarantee, would then take over the security and execute on it. Is that a possibility under any of the BCAP loans?
Yes, it is a possibility.
Okay, thank you.
Okay, thank you all. Turning then to Ms. Zerowitz, and then we'll be followed by either St. Marie or Mr. Brunel Duceppe, whoever wants to go on the block side. Ms. Zerowitz.
Thank you so much, and I want to thank all our panelists today for coming to present, and thanks for the important role that you are providing to Canadian businesses during this time. I know that you've had to sort of step outside of your main mandate, and so very much appreciate all your efforts. I was curious, you had mentioned that there's been 400 loans approved. Do you keep a tally on how many loans have not been approved?
So perhaps I can take that one quickly. These are the loans that the banks have advised us that they have currently that in works. We've also asked them to provide us some details of loans that they have declined. So that's the data that we are collecting and that we would hope then to share with the committee by the end of the week when we have that data.
Okay, that would be helpful just because it'd be nice to know who's asking for help that for some reason we're not able to provide some support to. Then it gets into a little bit of the transparency of just who's receiving the loans. Do we have a clear list of who the loans are going to and how much money is actually being allocated for the different loans?
So we will have details of who is in receipt of the loans because they are formal arrangements between the bank and a customer. So we will have that. One of the things that as we built the program, we actually put in place reporting that was like 45 days after loans are actually assigned and agreed with the customer. So that's part of our challenge in terms of reporting data because there is quite a lag time in getting the data. We have subsequently asked that we have the ability to reach out to the companies and perhaps understand a bit more the data behind the company itself, not just the name, but what sector is it in, what geography is it in, and perhaps some other questions that we might like to understand about the companies receiving the actual loans themselves. With respect to the CEBA program, that information is all available today.
So in terms of, just so I'm clear, you're asking who in order to be able to go directly to the companies to get that information. Are you asking the banks for it? And then are you just waiting for a reply? Just because I do think that's important information and it ideally would be more timely than 45 days.
Yes, we understand, and perhaps that was something that we should have reflected on at the start, that we set that criteria with the banks. And of course, for them, it's actually collecting all of the information. One of our parameters was to try and ensure that it was faster. So we didn't ask for a lot of upfront data on the companies. We will have to collect it afterwards, and we are seized with getting that done.
Okay, thank you. My next question, as you know, we're starting to reopen the economy. We're trying to, look out into the future. And, our Prime Minister has often talked about how we're going to be moving forward to build back better. And I think everybody knows that we have a number of commitments around a net zero economy, achieving our Paris Accord targets. If you look at the loans and the loan program that the federal government has introduced for large employers in terms of supports, there's a number of criteria that's been applied. And one of the criteria is actually around sort of climate-related disclosure. So, how the future operations will support environmental sustainability and national climate goals. If we were to put that criteria onto sort of our medium-sized companies, do you think that would have an impact in terms of companies actually applying for these loans? So for the BCAP program.
So there are two BCAP guarantee programs, the one for the small companies and one for the medium-sized companies. What I can share with you is that with respect to our support in the oil and gas sector, we have attached that requirement for climate-related disclosures in line with the task force for climate-related financial disclosures. So we have done that very specifically with respect to a carbon-intense industry, so that that is part of the criteria of our support with respect to the RBL guarantee. It's difficult for me to say, would companies decide that was something that they would take on or not with respect to the guarantee. We certainly are advocates. In fact, EDC has signed on itself to the TCFD in 2018. And these are discussions we have often with our large buyers our large customers in understanding their own approach to climate and where they're going. But as for the companies themselves specifically, we have not had any feedback to EDC with respect to either accepting or declining on the basis of climate-related disclosures.
And can I just clarify, Mr. Chair,
yeah,
can I just
ahead.
clarify
Go
just
ahead.
one point? Can I just ask, so you're already asking right now for companies who are applying for BCAP that they disclose the risk posed by climate change to their business before they can apply for a loan?
So we are asking that specifically in our support for the oil and gas sector.
Okay, only specifically. Thank you.
Thank you. Before I turn to Mr. St. Marie, I have a question myself, and that really is with the new measures that have been put in by COVID, the COVID-19 pandemic. How far, or is it any distance at all, for that matter? How far has it taken EDC from its original mandate? I mean, I know EDC. Through the potato industry and the aerospace industry. And in fact, in the potato industry, various exporters wouldn't be in their markets if it wasn't for EDC. You get very high marks in my province for the efforts you do on guaranteeing loans really with other countries. So where does these new programs put you in terms of your original mandate and the export business? We are an exporting nation. I don't see it being another bank. That's the bank's job. So can you answer that?
Yes, I can, Mr. Easter. Thank you for that. So you're quite right. There are some sectors where EDC is extremely well known. Another one would be seafood, where we've done a lot of support in those specific sectors. And I would say those customers are very familiar with EDC. And during the crisis, we've seen a lot of outreach from those very traditional sectors that have been involved with exporting and do understand EDC. Where I would say we have seen it the most is in our credit insurance program, because that's truly where we are counter-cyclical. And what we do see is that in these times of crisis, that often the coverage in insurance programs can be pulled back from the market because the risk has increased. So it's really where EDC does need to step in. It's perhaps a product that people are now more interested in insuring their receivables. So actually, we get a lot more queries with respect to domestic companies interested in understanding credit insurance and how EDC supports credit insurance. Our basic principles are ensuring that we are complementary to the market. So when you ask if we moved away from our traditional mandate, the answer is yes, where we have had to move away to try and help the companies. Can we move back from that? Absolutely. We've done it in 2009. We can do it again. But the primary place would be in our credit insurance product.
Okay, thank you very much. We'll go to 2.5 minutes round for the next two questions. First, Mr. St. Marie, then Mr. Julian. Gabriel.
Oui, merci, Monsieur le Président.
Thank you, Mr. Chair. Very interesting debates we're having. It's very interesting to see just how EDC can modify its mandate and so quickly. Here is my question. Marc-André Viau from Équiterre appeared before the committee, and he told us that Équiterre's environmental partners asked for a study on your organization, and this study revealed that since 2016, EDC offered $45 million in support to the oil and gas sector compared to $7 billion in clean energy. Are these numbers exact? And the ratio between two sectors, is it still the same during the COVID-19 pandemic? And do you think this ratio will be maintained, or will more investments be made to the clean energy sector during COVID and after COVID? Thank you.
Who wants to take that?
I'll let
Celebrity? Okay.
Mr. Burlock start, and then I can weigh in.
Go ahead, Mr. Burlock. Your mic's on yet. Your mic's not on, Carol.
Yes, okay, thank you. So certainly our clean technology initiative started in 2012. So really it's come from zero 7 years ago to what it is today, which is about 2.4 billion per year. So it's been a growing part of our business. That being said, we still do business across all Canadian sectors. The energy sector has been a big component of the Canadian economy. We continue to support it. We did make commitments in our climate change policy, which we publicly issued in 2019, to set a target for the percentage of our portfolio in carbon intensive industries. And we set a target to reduce our carbon intensive sector portfolio by 15% through 2023.
Okay, we'll have to turn to Mr. Julian. You get a supplementary there, Gabriel? Or are you okay in that answer? Okay.
Oui.
Okay.
Oui, donc juste bien comprendre.
I just want to make sure I understand everything correctly. When it comes to the clean energy sector, it's lower because it's a new initiative since 2012, and with your new engagements, this should just be going up and up in your portfolio, if I've understood correctly. And that will be all, Mr. Chair. Exactly. Sorry, last time I had the interpretation, and so I did not hear the question in French, but that's quite right.
Thank you both, Mr. Julian, and will be followed by Mr. Cumming.
Oh,
Peter.
thank you. I'd just like to clarify. Thank you very much, Mr. Burlock. You said $2.4 billion last year for clean energy. How much in supports through the EDC went to the oil and gas sector? You didn't answer that part of Mr. St. Marie's question.
I don't have the exact number for last year, but it is higher than 2.4 billion. I can come back with an exact number unless one of my colleagues has it.
Okay, thank you. The Équiterre has said $45 billion compared to $7 billion for clean energy, but it would be great if you could clarify that with us. I've got just a quick question around conditions in the credit facility. You alluded to, Ms. Lavery, share buybacks. Are dividends and executive bonuses also included as part of the credit facility? And when the credit facility is approved, is it transferable? In other words, if a bank is really gouging a business that is trying to make a go of it, and can they take it to another financial institution so that they can get a less onerous interest rate?
So thank you, Mr. Julian, for those questions. We've been very specific in the conditions for the BCAP guarantee to eliminate any payments of dividends, increases in CEO or executive compensation, share buybacks, etc. So those are not permissible under the program itself. With respect to gouging and transferring, it is a specific loan between a financial institution and their customer supported by EDC. We do internally ensure that we are providing the same facilities to the 120 institutions that are on the program. So if a customer wanted to break their loan with their financial institution and move to another one, as long as that financial institution is in the 120 programs which the guarantee is offered, then it would be available to them there as from us.
Go ahead, Peter. You got time for a quick one.
Thank you. Just coming back to violating the issue around executive bonus, share buybacks, dividends. Who polices that? Is it the bank that polices it, or is it EDC that gets a report from the company that makes sure that that doesn't happen?
So this would this would be a specific term and condition of a legal agreement. We would continue to be monitoring the companies for which we have relationships with, as would the banks with respect to their agreements. So I would say there's both self-monitoring and monitoring from all parties to the agreement. It is a legal agreement.
Thank you. Thank you both. Mr. Cumming will be followed by Mr. Fragiskatis. James, 5 minutes.
On the BPAC loans, if the bank ends up having to extend term because the client's in a bit of trouble, does it go along that you'll extend guarantee over the term?
Carl, would you like to answer that one specifically?
Yes. Typically, we're open to do that, and the BCAP guarantees were modeled after our existing export guarantee program, which we've had in place for many years and supports over 1,500 Canadian companies. So those are the principles by which we've always operated. And if a bank is willing to renegotiate the term with a company, they have to ask EDC, and then we consider that.
Okay. And this is probably for Mr. Burlak because he dealt with the CEBA loans before. One thing you didn't mention with the changes that are coming in the next week, you didn't mention personal bank accounts. Will those provisions be included with the upcoming changes? The use of personal bank accounts.
Yeah, so it's Mr. Winterholt.
Was Mr. Winterholt? Sorry.
Oh, that's okay. I can take that one. So under CEBA 3.0, that's not contemplated. Policy owners of the CEBA program are both the Department of Finance and Global Affairs, and they've taken any further discussion on program evolution away with them.
So the announcement that the minister made that they will consider personal banking accounts will not be coming with the changes coming up in this next version. Is that clear?
That's correct. They're not part of the 3.0 version.
Okay, so we have no idea when that may happen at this time.
I do not.
Okay, and can someone tell us what the actual size of loans on average are within the CEBA program?
Sure, happy to do that. Actually, that is a program where we do have a fair amount of data, given it's a little bit longer in the tooth, so to speak. And so in terms of average size, it is pretty close to the full 40,000 that is eligible. That's partially a function of the fact that the grant component is attached to that. So companies that apply for the loan to get the 10,000 grant amount take the full 40,000, of which 10,000 is repayable.
Okay. And on the 10,000 repayable, if a company starts to pay down the loan within before the 2022, how do you determine what the forgivable amount is?
So it is a flat forgivable amount, so that up to 10,000 that's forgivable is regardless of when the payment occurs, as long as it's before the end of the period, as you indicate. So
if they only have the capacity to repay 15,000, then the forgivable amount is not forgivable? It's not pari passu or prorated.
That's correct.
Okay.
That it, James?
Yeah, that's good. Thanks.
Okay, we'll turn to Mr. Fragiskatis, and if Mr. Cooper wants in, there'll be time, and then to Mr. McLeod. Mr. Fragiskatis.
Thank you, Chair. I would like to know from Ms. Lavery, if I could. Ms. Lavery, you said in your opening statement that at the heart of EDC's work is risk mitigation. What is understood by risk mitigation? How do you conceptualize it?
Thank you for that question. So yes, we do see ourselves as risk mitigators, whether that's by providing insurance products, which are a very traditional risk product to ensure that people get paid, whether it's some of the knowledge products that we provide, so ensuring people have the knowledge to reduce the risk of actually entering into specific export transactions. It's also with respect to even the due diligence that we will do with our customers with respect to CSR, for example, and non-credit risks. Those are ways in which we can ensure that exporters are evaluating all of the elements of their international deals, whether it is a sales agreement or whether it's actually an expansion abroad. So when we work with them to understand their financing needs, we're also working so that they understand issues like human rights, like climate change, like business integrity questions, okay. so that even just that process is very helpful to them, because we truly do believe in responsible business.
Thank you very much. From the mandate of EDC, it says the following: export credit insurance is offered to protect against uncontrollable events, such as a buyer refusing to pay. My question relates to the understanding of uncontrollable events. How flexible is that definition? And secondly, how stable is the fund? Is there enough money there, simply put, to ensure insurance payments are made and companies are supported that might be in need?
Yes, absolutely. So uncontrollable events. I mean, we have very specific insurance policies and insurance agreements. We try to simplify those as much as we possibly can. In fact, we've developed an online product, and for some of our smaller customers that just need to know if the buyer is in fact credit worthy, they can even just do a credit check with us. That's a way that we can help them. And then it goes to actually the policy itself, and it's very clear with particularly with our online products what the cover provides and what would be the examples of events and what are the obligations of the companies themselves, because equally we've seen examples whereby people want to make an insurance claim but haven't actually provided the product to the foreign buyer.
Ms. Levery, I hate to interrupt. I'm sorry about that, but time is limited. I would understand when you say that the understanding of uncontrollable events is flexible. So if reasons for non-payment include COVID-19, simply put, that would be something that EDC would accept?
So I think we have actually been working with our clients on issues such as this, where goods have not been received, and that's what we've been working with them, not being able to be delivered just because of closures of borders, etc. And those are all examples that we will work with the policy holder to make sure that we understand very specifically what was needed. With respect to your second question, are there sufficient funds? The answer is yes. EDC has for a long period of time been self-sustaining in terms of its own performance, and we are able to meet the requirements of insurance claims that may be posed upon us.
One last question. Thank you, Mr. Chair. Is there a figure that you have, and if you don't have it today, that's fine, but what was paid out in 2019 in terms of insurance? And is there an estimate and any that EDC has come up with at this point in time as to what could be paid out in 2020, obviously being an extremely difficult year?
Yeah, so I apologize. I don't have that with me. I assume you mean when you say paid out, the claims that we have actually paid on our insurance program.
That's right, for the year 2019. And if you don't have it today, that's fine. But I just asked the question because when we talk about whether or not there's enough funds there, it would be interesting to see what was paid out in 2019 and if there's an analysis on an estimate for 2020, comparing the two.
Okay, thank you all, and we'll look forward to that information. Send it to the clerk. We'll split the remaining time, which will give you about 2 minutes each. Mr. Cooper and Mr. McLeod. Mr. Cooper, your mic's on, not on, Michael.
I will pass, but I concede to Mr. Cumming or Mr. Morantz if they have anything to follow up on. Otherwise, I'm good.
Okay, Mr. McLeod, we can come back to Mr. Morantz if he wants in. Mr. McLeod.
Yeah, thank you, Mr. Chair, and I want to thank the presenters for the information provided us today. I really appreciate it. I represent the Northwest Territories, and right now we have no COVID cases in the Northwest Territories, and that's largely because we've closed all our borders to Yukon and Alberta, and we've done a pretty good job of keeping ourselves locked in. It's really had an impact on our economy, though, and the government has done a pretty good job on supporting the different businesses, and we seen the introduction of the Northern Business Relief Fund that really helped us when we focused on the companies that fell through the cracks. But we're still hearing from companies that are very worried, even though they've been able to access funding, loans and contributions. They still feel that on the long term they're going to struggle because there is other parts of the world opening up, and I'm referring to the tourism industry and the hotel industry. We're seeing destinations in Alaska, Iceland, Greenland, Sweden, Norway. They're all opening up for travelers, and we're going to see that in our country, in Canada too. And we need flexibility. We've seen some flexibility to the CEBA program that made sole proprietors and those with payroll of less than 20,000 eligible. And I'm assuming there's been a big uptake on that. But I just wanted to ask if there was any kind of recommendations or any position or any kind of thought given to what is going to be needed as we go forward, because there's still going to be some jurisdictions, some regions that are to be closed for a longer period than others. And I'm thinking of the north is probably going to be closed a lot longer than the southern part of Canada. If there's any kind of comment or thought you could provide me.
Thank you, Mr. McLeod. And tourism and hotels is actually not an area that EDC has focused on with our exporting mandate a lot in the past. So it's not a sectors that, I would say we're sufficiently sophisticated at. I do know, as participating as part of Team Canada, both with ISED and BDC, who are more involved in those sectors. Those are discussions around what are the specific needs of those companies. Given that they're real estate based, given that they are dependent on the flow of traffic, what actually could be done. So I think that's one that I know my colleagues are working on, but EDC less involved with.
That it, Michael?
That's it. Thank you.
I believe, Peter, you had a quick question. I seen your hand there. Julian?
Yes, thanks very much, Mr. Chair. Just to our witnesses, we've had a lot of businesses come and say that they've had difficulties in access to liquidity. And so I guess my question is to you, do you feel in any way this program where the banks basically get a guarantee, so for them it's a no-brainer, it's a sweet deal. They get the guarantee from EDC. They assume all the profit from that transaction. Do you think that's had an impact in actually diminishing what the bank should be doing, which is providing liquidity to a lot of other businesses outside of these programs? Because that very clearly, from all of our hearings, has proven to be true, that the banks are simply not providing outside of these programs where the federal government or the Canadian taxpayer provides all the guarantees. They're not providing the supports. Do you feel this has had an impact in a negative way in that sense?
So we were very careful, Mr. Julian, when we struck the program to make sure that it was complementary and that it was bringing the private sector along. So it's not 100% guarantee, and it is for new funding. So to actually get the guarantee, the banks have to extend new credit, and then they don't get, they get in the small case up to 80% guarantee or an 80% guarantee. And as we move up to the larger companies, they get only a 75% guarantee. So we're very careful in the design of that program to actually bring the private sector along with us. And that's one of the founding principles of EDC, which is complementary and commercial. So by remaining commercial, we can ensure that the banks we can step into commercial arrangements, and then complementary, making sure that they're done with the private sector. We do not want to crowd out the private sector.
Okay, thank you. We will have to end it there. We are at the designated time frame. That was good information. So I want to, on behalf of the committee, thank Export Development for the work you do as a company, and to thank the three of you today for coming as witnesses and answering our questions. We are an exporting nation, so you're a crucial cog in that wheel in terms of the Canadian economy. So thank you again for your presentations, and I believe there is a couple of questions that you can send the information back to the clerk on. So with that, thank you, and we'll suspend for 2 minutes while the clerk arranges the next panel. So meeting suspended. Thank you all. is called to order. This is the second panel of meeting number 35 of the Standing Committee on Finance. Pursuant to the order of reference from the House, we are meeting on the government's response to the COVID-19 pandemic. And we're pleased to have with us for the next hour and a half, Business Development Bank of Canada, Mr. Denham, President and CEO, Jerome Nitz, Executive Vice President, BDC Capital, and Karen Kastner, Vice President, Partnerships and Government Relations. Welcome, folks. If you could hold your remarks to about 10 minutes or thereabouts, and that'll give us ample time for the committee to go to questions. So I imagine, Mr. Denham, it's you that's leading the presentation. We'll go from there. Welcome.
Right, correct, Chairman. Thank you very much. And I want to just start by thanking all the members of the committee for your service and for the work you do, especially during these challenging times. Canadians are counting on solid leadership, and I'm just very pleased that the committee members are providing it. I also just want to reiterate, Mr. Chair, that my two colleagues are with me, and I've in particular Jerome Nitz, who's EVP for BDC Capital. To the extent there are detailed questions on our pandemic response as it relates to venture capital, I'll make sure that Jerome has a chance to answer those. Now, I know the BDC doesn't require a long introduction by virtue of our 75-year history and the fact that we've been mentioned a fair bit in media since the start of the pandemic. But for the record, I just want to remind folks that the BDC is Canada's only bank that focuses exclusively on entrepreneurs. We're Crown Corporation. We report to Parliament through the Minister of Small Business, Export Promotion, International Trade. We operate at arm's length from the government as a lender and as an investor. And in this sense, we complement rather than compete with private sector financial institutions, and we're not in the business of providing grants. We take on more risk than other financial institutions, and when times are tough, as they are now, we like to step up, and we expect to step up. We also have venture capital and advisory offerings. So what I'd like to do is describe the listening that we've been doing to entrepreneurs and share with you as well the direct and indirect measures that we've taken to help companies in response to COVID and also in response to the drop in oil prices. So we've done 6 surveys, both of clients and non-clients, basically once every 2 weeks since the crisis started. And these are published on our website. And since the beginning of the pandemic, the sentiment has improved. Entrepreneurs are still, don't get me wrong, quite concerned, but the sense of panic that existed initially has subsided as entrepreneurs have taken stock of the situation and the host of relief measures that are now available to them. So let me illustrate. In response to the question, quote, how worried are you about the impact of COVID on your business? 83% were concerned at the end of March. That number is down to 69% as of mid-May. Similarly, on the ability to borrow, 36% were concerned at the start of April. That number is now down to 20% in May. We're also seeing sentiment improving around several key business dimensions. Ability to keep employees on payroll, 47 versus 65 now. Ability to repay debt, 45%, now 60%. And keeping businesses open, 37% versus 61%. In fact, concern is growing more about the ability to meet demand and the lack of personnel to do so. So notwithstanding these improvements, and don't get me wrong, the level of concern in absolute terms remains very high, but I do want to highlight there has been some relative progress made in terms of the level of concern. On recovery, 76% of those surveyed feel ready to resume their activities, with 50% saying it will be easy. And the top lessons entrepreneurs have learned, which they've shared with us, on the importance of good cash flow and an emergency fund, as well as expense control. Looking ahead, 36% plan to reduce their expenses, 32% to broaden their offering, and 30% plan to sell online. So that's a summary of what we've heard through our extensive surveying of entrepreneurs. Moving now to BDC's activities. On our direct measures, We introduced postponement of payments for up to 6 months, free of charge for existing BDC clients with total loan commitments of $1 million or less. We've done almost 37,000 of these postponements, representing more than $800 million in cash flow benefits to our clients and 16 billion, or about half of our existing loan portfolio. The volume of requests for these postponements continues to decrease, and now we're down to about 30 per day from a peak of 1,200 per day in late March. We're also authorizing new direct loans. We have an online financing loan, which is up to $100,000. And we adapted this to use a higher risk threshold than normal. So we're accepting lower credit scores than had been the case given the uncertain times, and we've reduced our pricing. Working capital loans for up to $2 million. We're also offering these, providing flexible payment terms and payment postponements for the first 6 months, and we've reduced pricing on this product as well. Application rates for these loans were tremendous early on. In just 2 weeks after announcing our first wave of measures back on March the 18th, we received literally more online applications for working capital loans in these 2 weeks than we typically do over a full year. I'd also like to note that since this peak, demand's been normalizing, and it would seem kind of in parallel to the improving sentiment of entrepreneurs, demands for online loans through BDC continues to fall. Notably, online financing applications are dropping gradually from about 80 per day due to the Canadian Emergency Business Bank Account and other measures that have been made available for entrepreneurs. But together, all told, we've authorized almost 10,000 direct loans for nearly $2 billion since our fiscal year started in April. And compared to our normal levels for these types of loans, this represents 8 times more in terms of volume and almost 14 times more in terms of the total value of loans we've authorized. And again, our debt solutions are intended to complement the other liquidity support measures that federal and provincial governments have introduced. And indeed, many SMEs have ended up opting for these solutions as their preferred and sometimes the only solution they need. Now, in consultation with the CBCA, which is the Canadian Venture Capital Association, and Réseau Capital, to help early stage tech companies, we've put in place a bridge financing program. This relates to venture capital to match a current financing round being raised through qualified existing and or new investors into eligible Canadian VC-backed startups. So the program is ideal for high potential companies who have investor syndicates that are willing to support them. And BDC invests alongside these syndicates. To date, we've done 23 deals totaling $45 million of investment. We originally announced the size of this bridge financing envelope to be $150 million, but based on the demand and the conversations we've had with VC-backed companies, we've increased the size of this program to $300 million based on this assessment of the market. BDC also offers advisory services. And on advisory services, we want to ensure that Canadian businesses have all the information they need to cope, pivot, and recover once the crisis is over. And we're doing this primarily through bdc.ca, so primarily free of charge, including advice for entrepreneurs in the forms of toolkits and articles on their key performance levers. There have been approximately just over 2 million sessions so far on bdc.ca, including close to 25% that have gone to specific COVID-related viewing pages. And we'll continue to make sure that businesses are aware of this free information that we're providing. We've also created 3 new COVID-19 themed solutions are now available to address the most pressing issues. And we created a resource tool for entrepreneurs summarizing federal and provincial COVID supports. And this summary tool has been downloaded over 6,000 times. Now, BDC can't do it alone. And inspired by the experience of the 2008 financial crisis, we're also involved with our shareholder, EDC, and Canadian financial institutions in BCAP, the Business Credit Availability Program. And the intent, as you all know, is to partner with private sector lenders to provide incremental credit into the system on market terms on a risk-sharing basis. Only the banks, along with other commercial lenders, can provide the massive reach and the speed that the economy requires now. And this speed comes from leveraging their existing banking relations to minimize the time-consuming back and forth known as Know Your Client. So banks have a key role to play in this program, as do credit unions. So small and medium-sized businesses can get support through a new co-lending program for their operational cash flow requirements through BCAP. And eligible businesses can obtain up to $12.5 million through the program, which will be risk shared 80% by BDC and 20% by the financial institution. This broadens our reach very significantly, and this solution complements the EDC Guarantee Program, which I know you discussed earlier today. And our program launched on April the 24th. 18 financial institutions are now signed up, with dozens more in active negotiations. Now, reporting on volume is dependent on the FIs and will involve a lag, so I don't have the volume information just yet, but I would be pleased, very pleased to come back to this committee with the banks to report on how the program is going. Also, as part of BCAP, BDC announced a mid-market financing program to make additional credit available up to $60 million per business until or before September, working closely with the companies or the primary lenders. And these loans are meant to be used to fund operational cash flow needs for 12-month horizon, which will in turn ensure a degree of continuity of operations during this period of uncertainty. It's structured as a junior loan and serves as a bridge, which is very light on cash flow to a point in time 4 years down the road. And I'd be happy to discuss the mechanics with the committee when we get there. This facility will be launching literally in a couple of days. We're just finalizing now the legals with the bank and will include support for all sectors, including oil and gas, as previously announced. So looking ahead to the fall, BDC will be there in the recovery, as we've done in the past, including during the credit crisis. We'll work with the government to make sure we share our market insights as the situation continues to evolve. And regarding our own offerings, we'll stay vigilant and continue to adapt to the evolving needs as the economy ramps up. We'll ramp up in a commensurate way to help businesses invest and to help them grow. And in particular, we can expect that Canadian businesses will continue to digitize, to adapt to the new reality, and will work to minimize the risks on their supply chains. So thank you for your attention, and I hope this lays a useful frame for our discussion. Thank you.
Thank you very much, Mr. Denham. We will go to a 6-minute round, starting with Mr. Cumming, followed by Ms. Zerowitz. James?
Great. Thank you, and thank you for appearing today. I was glad that we were able to get BDC out here to be able to hear how your programs are working. So what you've described is an incredible volume, some cash out the door, large application volumes. How have you adjusted your staffing levels to be able to deal with that demand? And what would be the comparable of time of application to actual funding year over year, given the volumes that you're experiencing?
Right. So this is an ongoing challenge that we're dealing with, but we've been able to move people to our key loan processing bottlenecks. So, for example, as I mentioned, when the crisis kind of first struck in late March, we received in a couple of weeks as many applications for loans through our online financing platform as we do in a year. And that's something that that type of volume uptick is not something that any scenario planning exercise would pick up. So what we've done is we have moved people from parts of BDC that kind of weren't as busy. We've trained them up very, very quickly. We've done our best to disaggregate the work so that we can kind of simplify some of the tasks for these people. And these folks have got stuck in to get the work done. So depending on where the queue is forming, we've done our best to kind of simplify our requirements, move people to the bottlenecks to make sure that we are moving as quickly as we can. Now, frankly, to your question, when all this started in March, we did our best to respond, but again, it was such a huge uptick in volume that we weren't able to meet the service and turnaround expectations of entrepreneurs. That frustrated us, that frustrated them, that frustrated us. But now we're getting back to a zone where service levels, turnaround times are getting back in line with what we've done historically. And there's much less frustration that we're picking up from our clients. So it took us a while to get to this point. It was chaotic and frankly slow at the beginning, given the volume. But bit by bit, we've made improvements, adapted, moved people, and I feel that we're back in a good place right now.
So I spoke to one of your clients, one of the accounting firms locally here, and they expressed their frustration with the messaging to them is that if you aren't an existing client, we just cannot take on any more applications. So is that the messaging that's going out until you deal with the backlog, or have you put processes in place that can deal with this emergency funding? Because really what we're talking about is emergency funding, and emergency to me isn't 5, 6, 8 weeks. It's these companies need the money and they need it relatively quick.
I totally agree. Now, I recognize that, and you can imagine how much feedback I get from individual companies and entrepreneurs who don't feel as though they've been well served. But there was no priority given to current clients versus companies that don't currently work with us. And again, if I look at the loans we've authorized since the crisis started, the number of kind of new clients we're authorizing loans to is significantly up. So I'm not challenging what you were told, but the person from our side who said that to the individual you referenced wasn't properly informed, because there is no priority given to current clients. We're doing our best to satisfy the needs of, frankly, all entrepreneurs with viable business who request finance.
So do you have actual measurables now of where you're at in that loan application process? I know you had, I believe me, I understand when you have a peak in volume. I get it. I have empathy for that, but there should be some measurables. Were you 2 months and now you're 6 weeks? Like, there must be some measurables that are in place now. What could I tell businesses to expect if they applied tomorrow?
Yeah, and again, it's depending on the type of loan, the complexity, obviously. But let's just keep the online loans, which are unsecured loans, below $100,000 for the sake of simplicity. And our turnaround times now from application to authorization are kind of 2 weeks and shrinking. And we still have these additional resources we brought to bear. So they'll continue eating into the backlog. So our plan would be to get down to service levels within a week, which is our norm, in the hopefully by next week or the following. So we're almost there, but not quite.
Okay. And you mentioned the mid-market financing program and the oil and gas sector financing programs. On your website, you characterize them as different programs, but you did mention them together. Are they dealt with as separate programs? And you said days. We're often hearing from the politicians, days turn into months. And in the oil and gas sector, it's been from announcement politically, it's been well over 2 months now. In fact, I think it's going on 3 months. So can you elaborate a bit on those two programs?
Yeah, and again, we're not pleased with the lag in timing either. So the R1 program, our chief risk officer would be with Jerome and Karen and me right now, but he's actually in a room with lawyers from Gowlings and McCarthy's, finalizing the contract with the banks. The only difference between, so it's the same solution from our side. The only difference is for E&P producers, oil and gas producers, it is important to get their reserve base bolstered. So what you just heard from EDC in terms of their guarantee for the reserve base is actually an important first step to make sure that the immediate cash flow requirements are met by for the oil and gas companies, and then our junior loan comes on top of that as liquidity for the future. Once you get outside of oil and gas, you don't have the same sort of reserve-based lending dynamic. Our traditional junior loan kind of works on its own. So the same product, but it's more hitched to EDC's guarantee for the reserve base for oil and gas than it is for the other sectors. So that was a complicated answer to your question, but I hope it's clear.
Okay, thank you, James. We'll have another chance a little later on. Ms. Zerowitz, followed by Mr. St. Marie. Julie?
Thank you so much, Mr. Chair. And I want to say thanks to you, Mr. Denham, and to your team for the important work that BDC is doing to support our businesses during this unprecedented time and to support our economy. So thank you. My first question is, when the federal government, when this all started, federal government was introducing a whole series of programs right away. So we introduced the Canada Emergency Business Account. We went to phase 1, phase 2, phase 3. So it's been an iterative process. Do you think it's been a good and effective model in terms of putting this program into place?
The one perspective that I can give you on that is the effect it has had on kind of entrepreneurs' liquidity they need. So I think that it's made, so from our surveys, for example, with entrepreneurs, having access to that $40,000 has been very significant. And one of the reasons why we think that sense of panic has gone to a lower level of concern. One of the reasons why we think there's much less demand now on us for online financing, loans, et cetera, is because CEBA has provided a very important source of financing to the hundreds of thousands of clients or companies that have taken advantage of it. So it's been a big source of pressure relief, an important source of liquidity, and we see that through our surveys and the reduction in demand on BDC for loans.
Thank you for that. My next question is, we get into the data, and I think you were talking about some of the surveys that you've been putting out, and I think you've given us some numbers as well. Do you have an accounting of who is actually receiving loans, how much they're actually receiving, and is that publicly available data?
It is, for the loans we provide, our direct loans, of course, we track everything. We know kind of who the client is, what their credit score is, what industry and where they're located. But that is kind of proprietary, private, confidential information between BDC and the individual.
Okay, perfect. Thank you. My next question is regarding entrepreneurs. So you talked a little bit about, moving forward, you're going to continue to be sharing your market insights with government, which I think is going to be very appreciated and much needed. Do you get a sense about how this whole pandemic, and as we move out of it, is going to change the way entrepreneurs are doing business moving forward? So do you start getting some senses, whether it's moving to digital, whether it's pivoting to different parts of their businesses, whether it's focusing? Do you have any sort of insights that you might be able to share at this point?
Well, I think there are many, but the most important one you referenced is the shift to digital. And I think what has become clear since mid-March for companies that never really had a digital presence, didn't think digitally, et cetera, is how relatively easy it is to kind of stand up and enable a business through e-commerce. And I'm making some of these specifics wrong, but if you look at Canada, I think there's something like 50 or 60% of Canadians kind of do their buying online, but something very low, like only 5-6% of Canadian businesses have the means to affect transactions through e-commerce. So Canada was actually behind where it should have been, where other countries were going into the crisis. So not only, I think, has this convinced us of the need collectively of the need to kind of catch up, but go beyond. And I look at the conversations that we're having now between our advisory services teams in particular and entrepreneurs, and we're having orders of magnitude more conversations on the need to digitize and have an e-commerce capability than was the case. And I think that's going to be, and this is good, I think, one of the lasting implications of what we're going through right now.
And is that support that you provide, just because as I talk to a lot of entrepreneurs and small businesses, I'll tell you there's kind of unevenness on how far along the road that they are. So is that a support that BDC actually offers at this time, or is that a need that has yet to be filled?
We offer the support. Right now, we don't offer the support at the scale required. So it's something we're looking at.
Okay. That's great. And then that sort of pivots me into my next question. So BDC, I think that I want to sort of maybe get a sense from you as you're moving forward, how is the needs of entrepreneurs changing in terms of the demands on you? And have you started looking at that? So you've talked about digital. Is there any other aspects that you're starting to see might be a need on BDC? to address?
Well, as I mentioned, I think we're going to have some. I think you all know this. We're going to have some ebbs and flows as the weeks and months progress. And right now, as I mentioned, because of the credit provided through the banks, because of some of the government measures like CEBA you described, that as we speak, the level of demands on us for loans is a lot lighter than it was. I think that will change over time as we recover and as the economy progresses. We are beginning to see, and this is pronounced in BDC Capital, where Jerome has responsibility. We are seeing companies begin to look to make acquisitions. Asset values are low. Some companies have weathered the storm quite well. They both have either an attractive share price right now or money in the bank. So bit by bit, we're seeing more activity and interest around acquisitions as companies look to kind of consolidate their presence and possibly integrate either horizontally or vertically. That's another theme that's emerging as we look at the demands on us right now, in addition to discussions around e-commerce and digital.
We're a little over. Julie, do you have a quick supplementary?
No, I think I'm good. Thank you, Mr.
Good.
Chair.
Then we'll go to Mr. St. Marie and on after that to Mr. Julian. Gabriel.
Oui, merci, Wayne.
Thank you, Wayne. Hello, ladies and gentlemen. Thank you for being here in this late afternoon to answer our questions. BDC, as we know, is at the forefront with businesses as a business partner in almost every sector in normal times, and as you said during your remarks, especially during the crisis. I found it very interesting that you surveyed your members, and you have given us numbers that seem to be quite encouraging on this. In those surveys, do you have a breakdown for every economic sector, for every industry, and what conclusions can you come up to based on the analyses of this breakdown, if you do have it?
Well, you know, that I don't have that breakdown in front of me, and I'm looking at my colleague Karen to see if we have whatever type of breakdown we have in the data. I will kind of happily, Mr. Chairman, provide back to the committee.
Does Karen want to come in there? She's welcome to come in if she's got a point.
Karen, do you know?
Thank you, Mr. Chairman. I don't have that information on hand, but we will undertake to check to see if we can provide an industry breakdown.
Okay, thank you.
But it's self-evident, you know this, that certainly sectors, accommodation, travel, retail, restaurants and entertainment have been hit incredibly hard. And I'm sure we'll get the data breakdown. You'll see levels of concerns for entrepreneurs in those sectors significantly higher than entrepreneurs in different sectors.
Je vous remercie.
Thank you. I think it's very important that the government ensures a follow-up for the economic sector, for territory, and for all different size businesses for all these sectors. And so I'd be very interested to have a look at those surveys. And if you could give us a general overview of what you have, that'd be great. Because at the moment, we have the impression that we're just working blind here. In some regions, the economy is starting up again, but to be able to adapt support measures for businesses to allow them to weather the crisis, we need this information and we need to know how the situation is evolving. In your opening remarks, you shared some numbers, and we see that there's a clear distinction between the situation in March and May, and we expect to see such an improvement in June as well. I think it will be important to support sectors that we think are sustainable for our economy and that will need help, whose restart would be a bit slower. As you were saying, Mr. Denham, for the tourism sector, for example, the restoration and accommodation, for example, it will be very important to ensure follow-up and support on their side. In your opening remarks, you said that you made loans to businesses and you decided to increase your risk tolerance for business funding. Can you tell us more about that? if you have this information, if it could be made public, normally what is the percentage of invested funds that were non-refundable? When we talk about taking risks, we have to talk about that as well. What would it be now, and what would be the difference between these different variations? Thank you.
Thank you for the question. So just to be, so we're what we call a responsible lender. So we lend to companies that we deem are kind of creditworthy. Now, as I said, we take 4 times the risk that traditional kind of banks and kind of private financial institutions do. So we're taking a lot of risk, but we're very careful in terms of our lending models and our loss models to make sure that we are lending to companies that we think will repay their obligations. So we're not in the business of lending to companies that we know in advance won't have the ability to repay. And it's important to note this for a couple of reasons. First is, as you would all know, it doesn't help a company that is struggling to burden itself with debt that it can't pay. That's kind of in nobody's interest. That's one thing we try to avoid. But secondly, and this is important, if we have $1 million of capital to lend, and we do what we think we're good at, which is to focus on those companies that do represent some risk but can pay back the loan. The way the modeling works is this $1 million we have, we can actually lend out $7 million. So you get a lot more reach, a lot more support. It's a lot more efficient. However, if we do, I'm going to overstate it a bit, if we do lend to companies that won't and can't pay back, we're stuck lending only at that $1 million. So in terms of not burdening individual companies and getting as much reach out of the scarce capital that exists, it is very important for us to do our best, while taking a lot more risk than banks do, to make sure we are providing loans to companies that we think and they think have the ability to repay. That was a long answer to your question, but I hope you found it useful.
Go ahead, Gabriel, if you have another.
Merci.
You okay?
Oui.
Okay.
Il me reste une.
I think I have 1 minute left.
Très bien.
Great, thank you. Does BDC analyze the economy as a whole and the economic situation? We are in an offer crisis with sanitary risks. Businesses have had to close and they're reopening now, but we are in a demand crisis as well. Consumers' behavior is different now. They stay at home and want to pay down their debt rather than to spend more. Have you analyzed that? And also, financial support measures that have been implemented. According to you, have they been as efficient as you thought they would be? Thank you.
So to your first point, we have a chief economist, a gentleman called Pierre Cléhoux, and he has been, because the economy is in such flux, regularly analyzing the state of the economy, both to your points in terms of the issues around demand, as well as issues around supply. And that's led to, again, particular focus on industries where both those factors are particularly challenging. And again, in terms of the various support measures that have been taken, we actually haven't analyzed, the translation was the word efficiency of these measures. So I can't comment on that, but what I can comment on is the fact that that liquidity has been very important for the survival and for the continuation of kind of many companies. And again, we see that in terms of reduced demands on us for financing.
Mr. Julian, followed by Mr. Morantz. Peter?
Thanks very much for our witnesses for being here, and we hope that your families are safe and healthy. Got a series of questions, so I'll just put them right out and hope to get responses. We heard from EDC, and they said that in the BCAP program, they currently had 400 applications that were in the process of being signed. I think you indicated, Mr. Denham, that there were 18 financial institutions with whom BDC has signed agreement around the BCAP. Could you tell us the number of applications that are currently being considered, though we understand you can't tell us the number that have been approved?
So I'm going to give you an answer that is a bit long. Let me just preface that because the nature of the EDC product and what we do is quite different. So the way the co-lending works, it is entirely with the banks to do the adjudication and the decisioning. And we've written the contract so that the expectation on the banks, what they signed up to, is to make sure that they use this credit enhancement from us to make sure that they lend in a way that reflects the specific challenges and circumstances of COVID. So we're asking them to kind of get beyond their traditional risk appetite and level of risk.
Okay.
So what they do, so they take care of the adjudication, the lending, all the customer relationships, and then they send to us once a month the kind of master file. And once we get that master file, we fund 80% of what they've done. So right now, we're going to get this master file over the course of the next couple of weeks. That's why I say once that information starts to flow, we'll have more precision. I'd happily come back with the banks to talk about, at least for this first month, what the volumes look like.
Okay, so if it's the banks that are doing the actual lending, do you have in place conditions such as prohibition on share buybacks, on dividend payments, on executive bonuses, as the EDC program does?
Yeah, these are for very small companies, right? These are loans that are up to kind of $12.5 million. The vast majority of these are kind of privately owned, kind of entrepreneur owned. So we don't have, most of those provisions are actually irrelevant for companies this size.
And you don't have those conditions?
Not for this program, no.
Okay. Thirdly, you mentioned earlier in terms of postponement of payments for 6 months, this is outside of BCAP, but be interested in knowing provisions around whether or not companies can provide for in-kind interest, whether there's interest forgiveness as part of the program, either through BCAP or any of the other programs that BDC runs.
What we've offered and the 37,000 examples I described is just for interest deferral. On a case-by-case basis, we'll deal with clients that have kind of repayments issues. But what's been offered, what's been taken happily so, is interest deferral.
Okay, and does that come with fees or penalties, compound interest charges? Okay.
We waived all the fees.
Okay, so if you could lead us through, and we did this a bit with EDC as well. Basically the guarantee is through the BDC. So I would say it's somewhat a sweet deal for the big banks, of course. That what they get is the socialization of the risk, but it doesn't appear, and perhaps you can correct me if I'm wrong, it doesn't appear that there's any cap on interest rates that the banks would charge. What does BDC charge? Is it equivalent to what the EDC guarantee fees of 1.8%? Is there charges? Are there charges to the banks? And are there any caps on fees and charges and interest rates that go to those businesses that are struggling to make ends meet?
Right. So we don't charge anything. So the way, and it's different to what EDC is doing. Imagine it's a loan that the bank extends to. The way the program is meant to design, it's a loan that a bank would extend to a client. And as a client that the bank sees as representing kind of more risk than had been the case, it's a client that has kind of tapped out its operating lines at existing facilities. The client needs more liquidity, needs more money, but left to its pre-existing kind of risk appetite and processes, the bank wouldn't be able to do anything. So by BDC stepping in and taking 80% of the loan, it gives the bank capacity and a means to extend more credit without taking 100% of the risk. So the bank will adjudicate and decide on the loan based on kind of how it lends, its underwriting, the requirement to adapt its risk sweet spot for the environment. And then once a month, they kind of pass that loan to us to fund. So we're not involved day to day like EDC is. We're not really approving anything. The premise of our program is to get the banks to move their out of their traditional risk taking and take advantage of the massive reach and scale and speed that all these private sector financial institutions can deliver.
Well, I mean, you can understand. I mean, there are $5 billion in profits for the big banks so far in the pandemic. So a lot of people are raising concerns about the amount of largesse that's been showered on our big banks without any type of conditions. I gather, you can correct me again if I'm wrong, I gather there's no caps on fees and charges or interest rates charged to those clients, even though it's Canada that is basically assuming the guarantee in the loan. So it's very sweet for the banks. Are you concerned about milking of these businesses, windfall profit, when the risk is all assumed by Canadians, but there isn't any cap, any conditions around fees and charges and gouging of those companies that are struggling to breathe and to make ends meet and need this type of loan?
So we are concerned. We meet with the big cap banks every 2 weeks to talk about the program and its operationalization. I welcome feedback from all of you and others as to kind of how it's being used. Are folks being gouged? Is it delivering the policy goal to get credit moving very, very quickly? And when issues come up that need to be tackled, we tackle them. And we're getting better reporting in place, more frequent reporting in place. So every 2 weeks, we'll get much more granularity around volumes, pipelines, decline rates, et cetera. As I say, I'd be happy to come back with the banks to take you through that. But we're trying to be as vigilant as possible to make sure that with the banks, this program delivers on the expectations that entrepreneurs rightly have.
Okay, we'll have to end that round there. Before I go to Marty, just on Peter's question, say ABC company has a $4 million loan with one of the major banks. That loan is with them. You come in with the new scenario here to get additional capital. Is that guarantee of the 80% only on the additional capital or the additional capital plus the original loan?
Just on the new loan. So the notion of this isn't to guarantee commitments banks have made, and guarantee it's co-laying. It's not a guarantee. So we take 80% of the loan, of the value of the loan, but it's only for net new money.
Okay.
So it's designed to get new credit flowing rather than kind of protect the banks vis-a-vis existing credit. That's
all right.
I'm glad you asked that point. It's very important.
Thank you. Thank you for that. We'll go to 5-minute rounds. Mr. Morantz first, followed by Mr. Fragascadas. Marty.
Thank you, Mr. Denham. What I wanted to chat with you about today was what some have described as the deferral cliff. We had Mr. Siddall on from CMHC a couple weeks ago, talked about this. He said that there's something like 12,000 deferrals between insured and uninsured residential mortgages. EDC is involved in deferrals. We just heard a few minutes ago. You referred to them as postponements. But this deferral cliff that people are describing, to me, and I'm not arguing that these programs shouldn't be in place, but I am concerned that the ultimate effect of it will be essentially kicking the can down the road, because ultimately this money is not forgiven. You're not in the business of grants, as you said, nor is EDC. It's going to be owing. And as a banker, at some point, if a loan is in default, you're going to have to execute on your security. So I'm just wondering if there's been any thought or planning or discussion with government as we move through the ebbs and flows, as you describe them, of this crisis. What happens when we get to that point in time where these deferrals are owing?
Right. No, it's a real issue. There's no question, because there have been deferrals from CMHC, from EDC, from BDC. I think every chartered bank and credit union has offered deferrals, and that is an awful lot of payments that are accumulated have to get paid out. Now, I do think, looking at ourselves, we will organize the repayments around those deferrals to make them less burdensome. But that said, it's still going to be an issue for the economy to deal with. And when we've talked about this when I've had conversations with some of our companies we deal with about this, they had the choice of, they recognize that they are going to be building up obligations to repay in the fall. But given the choice, we'd rather have obligations to repay in the fall or kind of not pay any interest for the next 6 months. It was an obvious decision for them to make. So I think the collective deferral of payments, I think collectively was the right thing to do. But I think you're accurate in saying it's going to lead to a challenge we have to tackle in the months ahead.
Yeah.
And I think each institution will do what it thinks is right. I know we will be flexible and understanding. We get it. But I think you're right to put this as an important issue that needs to be.
Thank you. I think it's going to be a big issue. But just to continue on, I wanted to talk to you about, you talked about risk and how the point of the program really, or the effect of the program is to make banks a little bit more comfortable in their risk taking, which seems to be the opposite of what banks would normally be doing. Like under ordinary circumstances, some of these loans probably would never be made. I understand the reason that they're being made, but interestingly, what I'm having trouble reconciling is that when we had Mr. Siddall before the committee, he had talked about the possibility of tightening their underwriting policies, and in fact, they went and did it. They just made that announcement, and the thrust of it was essentially that he cited COVID-related vulnerabilities in the financial market. So here we have on one side a government entity basically pulling the reins back and saying, we're going to make it more difficult for people to qualify for loans. On the other side, on the commercial side, we're having governments say, we got to make sure there's liquidity in the business market. And I'm just wondering if you could reconcile these two approaches for me, as I've described them.
Well, let me just, I can't comment on, I don't want to comment on what Evan said in CMHC, but I know from the perspective of small business, which is our bailiwick, demand basically stopped, as we all know, for many weeks and is only now getting back. So companies were having no revenues coming in and they had bills to pay. They had rent to pay, they had people to pay, they had utilities to pay, they had accounts receivable to pay. So there was frankly, the first requirement was to make sure that we got liquidity moving so they had some money coming in, albeit in the form of loans, that they could use to pay their obligation to keep their business going. So I don't think there was any choice. Look around the world, there was no choice involved other than to get credit moving so the companies had some cash coming in that they could use to keep their businesses going. So I don't think anybody should be second guessing that, because that was frankly remains the right thing to do given the lack of demand and traditional revenues that are coming in.
Yeah, and I agree with you, Mr. Chair. Do I have a moment for another quick one? Just on interest rates, I know BDC has a number of floating base rate facilities out there, as many of the banks do. We've had now the former governor of the Bank of Canada on committee saying he thinks rates are going to go up. We've had the PBO, Mr. Giroux, say the same thing, and many others. I'm just wondering, if interest rates do start to rise, and then we have the debt cliff coming that we've already discussed, I'm just again concerned about what's going to happen down the road when these bills start coming due. Do you also consider that it's likely interest rates will rise, given that they probably have no other way to go? And just if you put your banking hat on for a second, if you were to look out a year from now, where do you think rates might be?
Now, again, based on the work that our chief economist and research function does, we do not anticipate increased rates in the 12 to 18 months that lie ahead.
Well, that's interesting. Okay, thank you.
Which I think would be the prevailing view, I think, of most lenders, most financial institutions.
Okay, thank you. We'll turn now to Peter Fragaskatas, followed by Mr. Cooper. Peter?
Thank you, Mr. Chair, and apologies in advance to the translators. I have lost the internet connection in my office here, so I'm working off my phone, and I hope they can hear me. If they can't, please let me know. If I could ask the question, sir, you said that BDC, and I'm quoting now, focuses on businesses that do represent some risk, but can pay back the loan. Could you define what is understood by some risk? I mean, how is that measured?
Well, we measure again. We take. If you look at our provisions, our allowances, you look at the level, the percentage of investment grade companies we lend to. We take 4 times more risk than the chartered banks on average. And then we look at the ability of companies to repay, and we'll look at their cash flows, their scenarios, et cetera. And we just have an ability. We're able to kind of put in the time and make the effort to understand the expected cash flows and underlying assets of these companies. So we take more risk, we take more losses as a result, but the combined effect is that we can kind of stay responsible, maintain the capital we need, and have the acceptable level of financial return.
And how would you say the current situation we find ourselves in compares to previous difficulties, say the post-2008 situation?
So the big,
and I'm just to clarify, I'm talking about BDC's role in terms of restart and recovery and helping businesses.
Yeah. So what's fundamentally different, as you would all know, is that there was a massive credit crunch and credit crisis back in 2008, 2009. So our role was to, in many ways, inject some capital to support the banks. We had to put in place a number of securitization facilities because the alternative lender markets had basically fallen apart. The issue now is different in the sense that the banks are functioning, they're robust, the efforts that so many people have done over the past number of years to make sure they have the right capital base and can continue to kind of play their key role in times of stress like now. All those efforts have paid off. So the banks have the capital base in place. They're able to lend. Overall lending amounts, as you know, are up like 20-30%. So it's a fundamentally different crisis because Canada now has again a rock solid set of financial institutions through which credit can flow to get to companies.
So is there any lessons learned then from previous situations? If it's not 2008, perhaps there's something else in terms of a playbook, or not? Is this truly completely unique from BDC's perspective? It sounds like it is.
Well, I mean, this situation is unique, but the one thing that we've learned in just times of economic crisis, whether it was then or now, we've been very active out in the oil patch since 2015 with the price environment. The lesson we've learned that we shouldn't hesitate to step up. We shouldn't hesitate to adjust the levels of risk we take. We shouldn't hesitate to put in place new financing envelopes. We shouldn't hesitate to put in place new solutions, because that is what a development bank is meant to do. So we've learned to kind of not hesitate, jump in, step up, do what's needed to make sure that kind of credit continues to flow and companies are in a position to take advantage of the credit to invest and grow and fund their working capital.
And to what extent are you engaged with other development banks globally in terms of comparing strategies, comparing notes, if you like?
So highly. We actually, to your point, we recognized a number of years ago there were key learnings we could get from other development banks. So we created a group, federation, if you will, of development banks around the world. It's called the Montreal Group, since it was our idea. And that brings together the French Development Bank, the British Business Bank, Finvera in Finland, Mexican Development Bank, Bendes in Brazil, the Chinese, Indian, et cetera, the Italians, the Spanish. And we get together regularly, but we also have just regular discussions through that to compare notes on what to do, what's being done in times like these. And certainly the development bank in France, which is called BPI France, is quite similar to what we do. And there's been a massive amount of exchange and learning on an ongoing basis since the crisis started.
Thank you all. We'll go to Mr. Cooper, followed by Annie Katrakis. Michael?
Good. Thank you, Mr. Chair. Thank you, Mr. Denham. Mr. Denham, you provided some results of a survey of BDC members indicating some reason for optimism. You've provided some additional statistics, which are good news, but I think you'd admit one sector of it probably is not all that optimistic at this time. is the oil and gas sector. And you've acknowledged in your testimony today that in terms of the rollout of liquidity support has been imperfect or not as good as it could be, having regard for the fact that this is an emergency situation in which the oil and gas sector, more than any sector really, is in dire straits. And you said, I mean, we know the announcement for liquidity support was back in mid-April. I was on the website today. There's very few details. Now, you said good news is on the way in a matter of days. Can you just clarify exactly what oil and gas companies can look forward to? When will be the day that they will finally be able to apply for this much needed support?
Yep. Thank you for the question. And we have been slow getting to market and operationalizing this solution. And we've been frankly quite steadfast with respect to over the years providing support to more of the SMEs that provide service to the oil and gas sector. And again, back in 2005, as I mentioned, when prices plummeted, we put in place, I think it was an extra $1.2 billion of financing with different levels of risk to make sure that in the days of that aggressive price decline, SMEs had access to the funding they needed. So we kind of get the importance. So again, I anticipate either Thursday, Friday this week, or Monday, we'll be issuing a press release and putting on the details of our website, the specifics of the junior loan financing program that we're offering. And again, it's for loans between $12.5 and $60 million. For E&P companies that need more than that, the right place for them to go is the LEAF facility that has been set up. And the way this is structured is, it's delivered through the banks because of the knowledge of the clients that they have and the quality of due diligence they can provide. And the basic structure is that it's a junior loan. So what it means is companies pay back really just for first year nothing, and then for years 2, 3, and 4 interest payments on the principal. And the principal payment is just meant to be paid back in one shot as a bullet in year 4.
Right. Understood. No, I appreciate that, Mr. Denham, and it's good that the details will be announced Thursday, Friday, or Monday. And then in terms of the application process, when would that be?
So that would be, and again, we're insisting on companies apply to this, learn about the program through us, apply to the program through their bank and their lead arranger. And all the lead arrangers have been heavily involved in discussions so far. So the banks would make it operational kind of quickly. So if an E&P company would call me to say, what do I do? I say, kind of go talk to your bank. Here's the program. Tell them what you need. And then that will lead them through the bank to us. But again, we're trying to move as quickly as we can because we recognize that every day, every week counts.
Right. And what would the processing time be?
It's a good question. It would be weeks. That depends on the complexity of the company. Sure. Depends on the specifics of their asset base. But again, there's so much expertise around these companies that the banks have that we're going to be able to short circuit a lot of the traditional diligence and underwriting because the role the banks are going to play.
Jerome is looking rather anxious there. Did you want in there, Jerome? Okay. Go ahead, Michael.
How much more time do I have?
You get time for another question.
Another question. Okay. So you're saying it could be several weeks, and I understand, obviously, depending upon the complexity of the specific application. But the bottom line really is what you're saying is that the oil and gas sector can't look forward to actually seeing liquidity for another 3 weeks to a month in most instances.
See, what really, you know the sector better than anybody. Yeah. What really matters now to E&P companies, frankly, is getting their borrowing base firmed up. And with the decline in prices, there's a real risk that borrowing base gets firmed up at too low a price and asset value. So it's actually the EDC guarantee that is much more time sensitive and urgent because that's what's essential to get the borrowing base bolstered up at an acceptable price. Most clients we talk to, the liquidity we can provide, they want and they need and they'll get. But for them, top priority is to get the borrowing base firmed up with their banks, and that's where the EDC solution is required, and where we don't play a role. So we're ready, but I frankly don't think that the junior loan we're providing is going to be critical path for most E&P companies. It's the borrowing base and the guarantee that they need first.
Okay, thank you. I'll go to Mr. St. Marie, followed by, no, we'll go to Ms. Kotrakis. Sorry, Annie, near missed you, and then on to St. Marie. Annie?
Thank you, Mr. Chair, and thank you to all our witnesses from the BDC this afternoon. Truly very useful information that is being shared, and thank you very much. One of the recommendations that has been made by the BDC to building small business resilience is to diversify the product and supply chains. It goes without saying that this will be easier for some businesses and more challenging for others. However, what businesses or sectors is the BDC expecting to struggle most with this diversification? And how can the BDC, as well as the federal government, do to support these businesses as they diversify their products and supply chains?
Very good. This is a very important topic, and we researched it hard a couple of years ago. And you know what we found with diversification is that a staggeringly high number of companies, especially frankly in Alberta, service providers to the oil and gas industry, were dependent on one client for over 60% of the revenues. So we're not talking about diversifying from oil and gas to airlines or from retail to wholesale. We're talking about diversifying your source of revenue from client one to client two. So we think every company needs to diversify its client base, even within its kind of core market, its client base, the geographies it penetrates, the segment it sells to. And there are lots of sales and marketing kind of tools and techniques and strategies that we've been introducing as a way to help people kind of migrate from a highly consolidated source of revenue to something much more diversified and as a result more stable and less risky.
And would you say that of the businesses that you've been in touch with or what you're hearing out there, are they open to the recommendations? Are they willing to work and move in that direction based on the recommendations that are being made?
Yes, they all get it. A challenge a lot of companies face, and we deal with some very, very small clients, right? Some clients that are kind of very small, that are owner operated. And it's just hard for that owner operator to frankly have he or she is so busy fulfilling demand and taking care of the current customer set that it's just hard to kind of find the time and find the tools to diversify. So I think without question, all entrepreneurs get it because diversification means stability. But it's just finding the tools and finding the time to make it happen is the big challenge.
Do I have time for one more, Mr. Chair?
We have time for two if they're quick, Annie.
Okay, great. So how has BDC's experience been working with financial institutions to provide loans through the new programs? Can you comment on any challenges that the BDC has experienced in these partnerships, and how have they been managed?
So far, and again, since we were born 75 years ago, we've worked alongside banks, and we have relationships with them in place. We're often, I think, in virtually by definition, every client we lend to has a bank account and an operating line from a bank. So our business is just working alongside banks. But your question with respect to BCAP, what we found is the structure of our co-lending solution actually works, and it's smooth, it's easy to administer. The thing that we just need to collectively look out for is to make sure that the banks are taking full advantage of this credit enhancement to get outside of their traditional and pre-existing risk sweet spot. That's the collective challenge, so that they do what's expected and implicit in the deal to find ways to lend more to clients than would otherwise be the case. And that's a function of we have information flowing now, we have a dialogue in place, but that's the key thing that we need to make sure we get right.
And what role does the BDC see with young entrepreneurs playing in Canada's COVID recovery? And how important are programs like Futurepreneurs Canada to ensure young entrepreneurs get the funding and the resources and professional service that they need to succeed? How will the government's commitment of 20 million be used to ensure young entrepreneurs?
Now, what I may ask is my colleague Karen, if she's comfortable to answer that question, because one of our key partnerships, frankly, one of the most important partnerships we have at BDC is with Futurepreneur. And as you know, we provide the vast majority of capital that they lend, and that, frankly, is our best vehicle to provide loans to young entrepreneurs. So, Karen, perhaps you can answer that question since you're closest to that relationship.
Yeah, well, we were thrilled to find that the Futurepreneur was given additional capital to be able to help during this very serious time. And as Michael said, we've been a longstanding partner of Futurepreneur, both in terms of providing capital that piles on to the capital that they provide to individual young entrepreneurs, and also we have a really good referral relationship with them, and that's one of the things that we've tried to do during these last couple of months, is really making sure that the ecosystem is working well together. So whether it be building on our existing partnerships with organizations like Futurepreneur, and making sure that where we can't help, that there's a warm handoff to another organization that can. So that goes for Futurepreneur. We've also been working with the RDAs. We've also been working with other partners just to make sure that the ecosystem is working as best as it can in support of the businesses that really need our collective help.
Thank you, Ms. Kastner. Turning then to Mr. St. Marie and Mr. Julian, a couple of minutes each if you could. Mr. St. Marie.
Thank you, Mr. Chair. My question is about businesses that are your clients. With the COVID crisis, there are economic impacts, and the government has put into place different measures, for instance, income supports. Your client base, what do they say about income support? Are they satisfied with the salary subsidy and the CERD? What measure have they used? And also, to cover wages, but there are also a lot of fixed costs. There has been no direct subsidy for those. So the businesses that deal with you, do they find that this would have been useful or necessary, and that the lending programs that we have now are sufficient to cover those costs? Thank you.
You know, I don't want to offer any conjecture on this point. But so what I see though, and I've mentioned this point before, is that through the reduction in demand on BDC for online financing loans and working capital loans, my inference from that is that clients are getting their needs met largely through the government programs that have been put in place around wages, around rent, around CEBA, et cetera. So I don't want to speak personally because you've asked a question about what BDC knows. We haven't actually surveyed this question directly per se, but by inference, through the reduced demands on us, our assumption is that the needs, at least right now, are being met, have been met through these programs.
Okay. Je vous remercie.
Thank you. And I would like to come back to my question. Oui, Wayne?
Oui.
I would like to come back to my earlier question, and I think it wasn't clear enough. I wanted to ask about your clients, those businesses, now that there is a stimulus to the economy and that people can start opening up again and going to see businesses. Do you think that there is enough demand I was talking about income supports earlier. Are those measures sufficient, or is that, or is it that people are afraid and that consumers have changed their habits? What are businesses saying about that?
When I think about the obvious example of retail or restaurants, client habits have clearly changed. We're not visiting these places as we used to. We're buying disproportionately online. And as I said before, companies that had close to zero online sales are now quite active online. In many cases, it's been the online sales that have saved the business. So consumer buying factors, consumer buying behaviors have changed significantly. What nobody knows is the extent to which that is going to endure in the months ahead as people feel more confident to get back into restaurants and get back into retail. Will they? Or will they continue just to demonstrate the buying behaviors they're demonstrating now, which is buying things disproportionately online? So it's a very good question. I can't predict which way it's going to go. I know a lot of our clients, frankly, in these sectors are preparing themselves for a much more active online book of business, the traditional come-in book of business. So they're seeing these behaviors enduring. And I guess we'll see in the weeks and months ahead. But it's important for clients to be prepared for much higher penetration of online business.
Merci.
Okay, thank you. We'll go to Mr. Julian next, who will be followed by Mr. Cumming, and then Mr. McLeod will wrap it up. Peter?
Thanks so much for being here today. And Mr. Denham, I appreciated your comments about concerns with the banks. I am very much in touch with small businesses in my riding, and a lot of them have found that there's been no support at all from Canada's big banks, despite the fact that, as OSFI tells us, there's been a cumulative level of support of $750 billion, $750 billion in liquidity showered on Canada's big banks, and they declared $5 billion worth of profits so far in the pandemic. So there is a real emerging concern about this, and so I appreciate you legitimately saying this is something that we absolutely have to monitor. Do you have a sense of what the average interest rate would be for the BCAP loans once they start to be approved? I understand there's no cap, but do you have a sense of what the average interest rate would be, or what the range would be from Canada's big banks around these loans?
Well, two things. So I don't. As I mentioned, we don't get the information till next week. But I do want to just make one comment. If you look at the data from the Bank of Canada, and you look at non-mortgage, you know this, non-mortgage lending for March and April, again, it was up 22% in March, another 30% in April. In total, it's up $61.5 billion from the banks, and this is putting aside kind of CEBA and other stimuli. So I hear the same frustration from a lot of our clients, partly relating to us, partly relating to the banks, but we can't lose sight of the fact that there has been a really significant extension of non-mortgage lending from the financial institutions to the economy, $61.5 billion, 22%, 30% increase. So I just want to make sure that your comments are valid. I don't want to make sure we kind of calibrate that in the sense that for the financial institutions, they really have put a lot more credit into the market than was the case.
Fair enough, though. I would just compare our local credit unions, Vancity and Community Savings, that reduced their interest rates to zero on lines of credit and credit cards because people are so desperate they're having to borrow just to make ends meet and get through the month. And the banks, as you know, have not done that. And so I understand your point. I guess the point back from individuals and businesses is that ultimately the banking sector is going to reap windfall profits from this crisis. They are already starting to, and yet at the same time, they're not providing, they're not passing on all of the largesse they've received in the last few months to small businesses and to consumers. I'll pass the the microphone back to you, Mr. Chair.
We will keep our eye on that as well.
Thank you both. Then we'll turn to Mr. Cumming, followed by Mr. McLeod. Mr. Cumming.
Mr. Denham, so you quantified that you're here to help the banks because they don't have the risk appetite. So you said four times the risk. Is there a risk premium associated with that? So I'm thinking of the co-lending program where you're actually providing the capital, not a guarantee. So what's the risk premium for that?
Again, the banks do the adjudication, the decisioning. So it's the banks that will determine to authorize the loan, and the banks will price that based on the risk they see of that individual loan. So again, when I talk about 4 times, that's for our direct lending, where we take risk kind of well beyond what I'm describing. But again, it's with the banks to price it. It's with the banks to kind of process it. I haven't heard any stories of unacceptable rates of interest, but this committee has been a good reminder that that's something we're going to need to look into carefully when this data starts to flow from them to us in the days ahead.
So if you're providing 80% of the capital, I presume then whatever interest rate they set, you're achieving that level of interest.
Correct.
And they're just generating off their 20%.
Correct.
Okay.
Yeah, the banking term for this is pari passu.
Yeah, pari passu. Okay. Yeah. So it just strikes me, if we're really trying to help these small businesses, and I'm really looking forward to seeing the data, is that's a huge issue for me. And along what Mr. Julian brought up, you're picking up 80% of the risk. You're riding on whatever premium they've associated with it, but you're willing to take 4 times more risk. So to me, there's a bit of a disconnect here with the funding model versus the banks adjudicating it. But that data, I do think, will be critical to see, are we actually helping these businesses that need the help?
And just one reminder, again, we continue to have our direct lending business, right, which is what BDC traditionally does. And again, we've authorized over $2 billion of loans since the year started. The working capital loan component of that is 14 times more than it was in the previous year. And again, we're taking and it's for our direct lending, where we're taking kind of 4 times the risk of existing banks. So that direct lending solution kind of will continue to exist, will continue to be there. And again, it's a big number. We anticipate it kind of staying big as companies continue to come to us when the needs can't get met elsewhere.
Yeah, they can't get credit elsewhere, so there is a risk premium on that. Your lending practice on that is a premium over what the commercial rates are at, as I used to understand it when we look at BDC.
Exactly.
Okay. So when do you think that, so the data, some of these loans will go back to March and April, and I know you said that there's a month lag, but it's been several months now. So is there, why the delay on the data for us? And particularly, there should be plenty of data with your direct loans and performance on those loans and whose size of loans and those sort of things. Is that the kind of data that the committee can get from you now or in due course?
So on the BCAP program, so it's the 15th day of every month, the files, because some credit unions kind of needed kind of time to get the information pulled together. The 15th day of every month, they send their files to us, and that's where we get all the information, and then we fund the 80% that stay with us. And that we're getting right next week is going to be the first real data flow, because this will cover all authorizations during the month of May. But then what we've learned, and what the banks have learned as well, is having this information flow only once per month, especially now, just isn't frequent enough. So we're putting in place kind of bi-weekly reporting from the banks that gives us more kind of granularity, more detail. So we're not just waiting 4 weeks for each slug of information. And that's something that we're putting in place as we speak that will mean that we don't have to wait until mid-July for the next installment of funding data.
Quick one?
Yeah, quick one. So, James, go ahead.
So I agree with you with diversity and you talked to diversity by client base to a large extent. I would encourage you on the oil and gas sector, the quicker we can get something out there, the more likely we will have diversity of client base, because I am deeply concerned we'll see a massive consolidation. and there will be no diversity of clients. So Thursday, Friday would be better than even Monday. Thank you.
I hear you. I hear you.
Okay, thank you, James, for that point. Mr. McLeod, you shall wrap it up. Floor is yours.
Thank you, Mr. Chair. I just have a couple quick questions. I was very happy to hear some of the information I've provided, especially on the concern levels across the country, going from 83 down to in March and down to 63. And I expect the information is different depending on what regions of the country you come from. And I'm just wondering, in light of the extensive surveys that were done, what the concern levels are in the north.
That's a good question. As I mentioned, that's a very good question. We don't have the data in front of us. And as I mentioned, we will look into what we have and share what we have. I just don't know whether each survey we have enough data from the north for it to be statistically significant, but whatever we can share that's meaningful, I'll make sure we do that.
Okay, well, it can't be extensive if you're leaving a good part of the country out. So I'd appreciate if you could provide me with that. I'm also very curious to see if there is participation in application from Indigenous companies.
Right, now, as you know, so very good question. We've been working hard for the past while through NACA, an organization to get more funding available for the Aboriginal financial institutions. We have our own Indigenous business unit, but we've just concluded that the best way for us to reach as many entrepreneurs, Indigenous entrepreneurs as possible, is through the network of AFIs, which are kind of tailor-made to do this. So we've been working on a deal that's called the Indigenous Growth Fund with NACA. It was set up a permanent facility that can be used to provide capital to the AFIs on an ongoing basis. So we continue to kind of work on that, kind of with them behind the scenes. But as you know, they were given NACA a kind of funding envelope over the past couple of weeks to in turn, again, deploy through the AFIs in this emergency situation. So our Indigenous business unit is active. We're excited about this facility. We've been working on to get more permanent capital set up to support these AFIs. And again, some of the more intense emergency requirements, I think, anyway, from what Shannon's told me, are being met through this government funding via NACA to the AFIs that was announced a couple of weeks ago.
That's very exciting news. I guess I'll just ask my last question if I got time.
Yep, go ahead.
Are we seeing applications from the north in general, and more specific, the Northwest Territories?
Yeah, one of my good friends, Adil Mogul, is our business center manager. You may know him up in Yellowknife, he is busy. So we are getting applications from the Northwest Territories through Adil. We have an office in Whitehorse as well. So unless Karen can correct me, from what I've read, the levels of activity and demand we're having up there are kind of in the same range, the same zone as we're seeing nationwide.
Okay, thank you, Michael. We'll have to end it there. I do have a couple of questions myself. We've had some concern raised about personal guarantees with the BDC. How prominent are the personal guarantees side of the lending you do?
Well, personal guarantees, as you all know, it's a kind of standard practice for any bank when it comes to unsecured lending. And it's just to make sure that the borrower has kind of skin in the game. It's like a large scale version of the skin we all have in the game with respect to our credit card bills and telephone bills. Granted, it's much higher scale. So personal guarantees are things that we request when there's the loans against kind of secured assets or fixed assets as collateral. The guarantees are less important. And again, to the extent that the situation doesn't work out, and I had a call today, one of our clients in Guelph, Ontario today, and things don't work out and the personal guarantee is called on, especially for us, we always do that, and we always have discussions with the entrepreneur in a very kind of collegial, kind of non-dramatic way. But again, personal guarantees are kind of core building block of unsecured lending.
Yeah, I know all about them from my farming days. The other point, I mean, one thing that we are short of in Canada is capital investment, especially private investment by companies to invest in innovation, new technologies, job upskill training, and so on. Coming out of this this pandemic, do you have any suggestions to us? The committee will be looking at what do we do post-COVID? What should we be recommending in government policy, etc., moving ahead to strengthen, improve our economy, improve productivity and investment? Do you have any suggestions you can offer of where we ought to be going?
Well, I know time is short, so you don't want a long-winded answer. But I know there are two priorities. One is there are some industries that are just going to stay kind of hard hit for a while. Thinking hotels, retail, aerospace related, and there I think we do need to be vigilant and medium term in terms of the support. And this is more Jerome's direct bailiwick than mine, and we don't have time to hear from him. If we do, we should. But there are, again, we have venture capital investments in over 800 companies across the country. Some of these companies are fantastic. There are a handful of unicorns in there, and I think making sure that we collectively ensure that these great cash-consuming, rapidly growing companies have access to the financing, especially equity financing they need. And I think governments, both through the BCCI program and prior to that, the VCAP program, Ottawa, I think, has done a very good job, a very thoughtful job in making sure that incentives are brought to bear for equity investments to be available for these companies. And I do think we can't lose sight of that, because these truly are remarkable companies. They've come a long way, and it would just be a real shame and sad for the country if we can't find a way to make sure they have access to the equity they need to continue to grow and ensure their rightful potential.
Jerome, we will give you a little space for a few words. We'll be a little over, but we've got a committee meeting following this, so we can squeeze in a little time. Go ahead, if you want to add to that.
Thank you, Mr. Chairman. I think it's fair to say, as Michael said, that we've got tremendous innovation in Canada. We've got a thriving VC community and innovation entrepreneur. I think one of the challenges that we have in Canada is having interest from mid-sized company or large company to buying innovation from tech startup. Many of our tech startup are selling to the US way before they're able to sell to Canadian companies. So bridging the gap between large corporates and the startup community is key to enable those relationships. And we've done a number of initiatives in the past year to try to bridge that and bring innovation to these corporates. So I think the financial institution, the FIs, have moved well in fintech and insurtech, but I think traditional corporates are slow in adopting Canadian technology. So anything that could be done in that regard would be helpful for the startup community. Thank you.
Okay, thank you very much for that advice. And thank you all three for your presentation, your answering our questions today, and also thank you for the work you do in terms of trying to make our economy more secure and get businesses to make the investments to secure a livelihood for all Canadians. So with that, thank you again, and we'll suspend for about 2 minutes, and then we'll come back with the committee meeting to do committee business. So
all right,
suspended.
thank you all. Thanks
Thank you very much.
For the opportunity. Bye bye.
Thank you very much. This is it is public. People should know that. And it is we'll just go through the business through till hopefully next December. But as you know, things are always subject to change. I believe, David, you sent a copy of the report of the steering committee to members, and that's been done. So you have that in your hand. We will discuss that. I know Mr. St. Marie had a concern with one point. There's that to deal with, so we'll go through that report and discuss it fully. And Mr. Polyev has a motion that he wants to put on the floor. And as well, there has been a slight event happen. I guess the House is, we won't be able to hold committee meetings as we proposed on June 25th because the House of Commons is closing down to do technology upgrades, whatever, between June 23rd and I believe July 5th. I don't know the exact dates, but I believe that's it. So we'll have to do something about that June 25th meeting if we go ahead with that. So okay, the subcommittee report is before you. I don't know whether I don't believe it's necessary for me to read it. You've all had the opportunity to read it. I'll just quickly explain it on point one. The point 1A, we've already had those meetings today. Point 1B, on Thursday, June 11th, we'll be hearing from the Minister of Finance Department officials as well as the Canadian Pension Plan Investment Board and Canadian Development Investment Corporation. On June 16th, we'll hear from the new Governor of the Bank of Canada. And we'll do on the second panel a study of the main estimates. On June 18th, we'll dedicate a meeting to a panel composed of economists from the major Canadian banks. We ask that members submit their witnesses no later than at the end of the day today. I do want to remind people, we've seen some of the names coming in. This is for bank economists, and probably we should stick to bank economists. That's what the panel was for. I see Peter shaking his head. He can discuss that later. We'll let you in on that, Peter. But that was what the panel was for, was to be bank economists. We have had economists previously. And 1E, Monday, June 22nd, the reason we're going to Monday there is June 24th is St. John Baptiste Day, and there's celebrations on the 23rd. So we felt, in fairness to anybody from Quebec, we should move the Tuesday meeting forward to the 22nd. Thursday, June 25th, we will have to make a change there as indicated in account of the House. Tuesday, July 7th, and Thursday, July 9th All those various meetings would be 2 hours dedicated to hearing respectively from the Auditor General of Canada, Chief Executive Officer of the Canadian Infrastructure Bank, the Commissioner of the Financial Consumer Agency of Canada, and the Superintendent of Bankruptcy Canada. And that 4 hours be dedicated to the hearing of witnesses that have requested to appear. So let's deal with point 1 first and see where we are on that. I don't know whether we want to go by agreement or if we want to go by motion. We can do it either way, I think, is possible. Is it, Mr. Clerk? Okay. Yeah, go ahead, David.
Just wanted to mention, yes, you can have some sort of agreement if you want, but the motion that was passed in the House requires that for any motions that is moved, that there be a recorded vote.
Okay, that's fine. We can do that. We can go to a recorded vote and do that. All right. Any comments on section 1? We break it down that way. It might be easier to do. I do know Peter had proposed a witness that wasn't from a bank. Go ahead, Peter.
Thank you, Mr. Chair. I did propose a witness that understands the banking industry profoundly, and I think it's fair to say is a very legitimate witness. So when we talk about bank economists, I believe it is the intent was to make sure that we had economists who have a good knowledge of financial institutions, which this individual does. So aside from that, I agree with everything you mentioned, including the fact that the House is shutting down. So June 25th cannot be a hearing date anymore, unfortunately.
Okay, what do you want to do on the June 25th? Where do you want to move that to? Do we want to cram it in and be basically done as a finance committee, except for emergency situations? That only takes 4 members to call a meeting. And we do have the House of Commons is meeting a number of days as well. Do we want to try and insert that meeting in before July 9th or what? We can work on that. Anybody get any comments?
Sure, that makes sense.
Peter's okay with that. Gabriel?
Oui.
You're okay with that?
2 things I'd like to say. For the June 25th meeting, we could have 4-hour meeting on June 22nd. And just like Peter, I agree with what he said. I think we can invite economists that know the banking sector, even if they don't work for a bank. So I support Peter on that front. Thank you.
Any other comments? Okay, then we will tie that, clerk, and I will work on tying that meeting in with either the meeting on June 22nd or one of the other dates. We'll try and get there. Okay, on point 2, that in relation to the committee's 2020-21 pre-budget consultations, that we basically go with normal procedure. I've explained this before. We'll put a press release out in June. The theme will be economic restart and recovery is what we're proposing. That's open to change if people are not comfortable with that. We'll ask for submissions to be into the clerk by August 7th at midnight, 11:59. The reason that it's done that early is so that all the submissions, they're less than 2,000 words. We ask them to put the recommendations up front. The reason it's in that early is so that they can be translated and go out to members, and then in the we'll organize the hearings in the fall. Everyone who has made a submission is considered to make a request to be a witness. We will have to sit down as a steering committee and try and work that witness list because sometimes there can be as many as 500 to 600 submissions. So that's the case. The point that Gabriel was concerned about was point F, I believe, was it, Gabriel? Notwithstanding the routine motion on the distribution of documents adopted by the committee on Wednesday, January 29th, 2020, the clerk be allowed to publish briefs in the language they are written on the digital binder site of the committee. Just explain why that was in there, Gabriel. When they come in, there's a lot of them coming in. It's going to take quite a while for them to be translated. They do have to be translated to be considered official record of the committee. So it was just to give committee members the opportunity to pull them up on the digital site if they wanted some bedtime reading between July and August. That's the reason. Officially, they have to be translated to be considered as a submission to the committee. So what's your thought on that?
Oui, merci, Wayne.
Thank you, Wayne. I understand your arguments. They're very good arguments. However, one, it goes against what we decided in January as the way committees should work. And the problem is that it gives an advantage to those who speak both English and French, or just English, since there will be many more documents received in English. And so the English-speaking members have an advantage regarding French-speaking members. And in the parliamentary practice, it has always been our way of doing things to have MPs be on equal footing. So I understand your arguments, but for the sake of equality between our two official languages, I would think that we should remove F.
Peter's hand up as well. Go ahead, Peter.
Thank you. Sorry, Wayne, just switching to my language, to English. I agree with Mr. Saint-Marie. I think one thing we could do is encourage organizations. We get a lot of briefs from companies that can actually, and organizations that actually do the translation themselves. So I think that would be the one. I agree with Mr. Saint-Marie on the principle, and I would suggest that we invite Canadians, if possible, to provide a translated document, English and French. And I think we'll find a lot of the organizations and the companies will endeavor to do that for us, which will facilitate things so there's not as much of a charge on the House of Commons. But as to the principle of having official languages, I can only agree completely with Mr. Saint-Marie.
So if, could we do it this way, that for those submissions that come in both official languages, they be posted to the digital binder site right away? The ones that are not will have to go to translation. Okay, are we agreed in that kind of a change? All right, and that's number two. Point number three. When the motion was presented in the House, the first House meeting after the pandemic started, and we're all shipped out of Ottawa, there was a part of the motion was K part. The Standing Committee on Finance be instructed to commence a review of the provisions and operation of COVID-19 Emergency Response Act within 6 months of the day on which the Act received royal assent, and to report its findings to the House no later than March 31st, 2021. So what we're proposing in that point 3 is that in order to meet the requirements of that motion in the House, that our very first meeting in the fall, when the House reconvenes, would be on that topic kind of organize ourselves. Then we would set that topic aside while we do pre-budget consultations and get that work done. And then as soon as possible after the pre-budget consultations is in the works, do the requirements to get a report done by March 31st. Hear the witnesses to be complete no later than March 31st, have the report in the House. That way we're not mixing up the two subjects, and we meet the requirements that the House has asked us to meet with, starting within 6 months. Okay, then that's the report. Does somebody want to move the report as changed with those slight changes we've made, changing F to ensuring it's bilingual, to go to the digital binder, and on June 25th we'll rejiggle that meeting. Somebody want to move that, and we'll go to moved by Peter, seconded by Julie. We'll go to recorded vote. Start, I guess, with Mr. Fraser.
I can do this, Mr. Chair.
Oh, okay. Yeah, you've got to do that. That's great. Thanks, David.
Thank you very much, Mr. Chair. I think that this will be our first recorded vote by a virtual meeting. It will be like when we do that in the committee room. Just going to start with the Liberals and then the Conservatives, Bloc Québécois, and NDP. If you can, please state clearly yes or no when you vote, so that it's clear for everyone. Starting with the Miss Zerowitz.
Oui.
Mr. Fragiskatos.
Yes.
Yes. Mr. Fraser.
Yes.
Ms. Koutrakis.
Oui.
Yes.
Mr. Cooper.
Yes.
Mr. Cumming.
Yes.
Mr. Morantz.
Yes.
Mr. Poilievre.
Yes.
Monsieur Saint-Marie.
Mr. Sainte-Marie, yes.
Yes, oui.
Yes.
10, 10.
10 yes, 0 no.
Thank you all. Then turning to the floor is yours, Pierre. I think the motion was sent out to people. If you want to go to the motion, read it, and go to discussion.
Yes, thank you very much, Mr. Chair. I think this should be a relatively uncontroversial motion that should achieve unanimous support from committee members today. As all of you know, the Auditor General has indicated a shortage of funding. This is due to the exceptional volume of government spending in need of auditing and some specific tasks that Parliament has given the office. One is to audit the missing funds in the infrastructure program, and the other is to audit the $152 billion of new spending in the last 2.5 months in response to COVID-19. There are also, of course, typically audits that the office is doing on its own accord without any parliamentary direction at all. The office has indicated, though, that this workload cannot happen with the current funding levels. But the other thing, I'll put it into context here for clarity. This year, government spending will be twice what it was a decade ago. It's hard to believe. The government has doubled its expenses in just 1 decade. And yet, the Auditor General's budget has barely grown at the rate of inflation. The opposition, the Liberal members, or the Liberal members.
Point of order there, Pierre.
I
I know during your prelude, Pierre, you've indicated you hope to get support. I don't know if you were wanting to convince us with the introductory remarks, which you're entitled to, but I expect you'll find support from our side of the table for your motion. So if it changes your approach to the sales job, that is information I thought you may want to have.
I don't really believe that was a point of order, but we'll let it go. Pierre, the floor is yours.
Well, it was actually a helpful intervention.
Build a consensus.
Well, it's a wise salesman once told me that when you've got the sale, just shut the heck up. And so, if I do have the support of all members of the committee, then I will just put the motion forward. I did take my friend's intervention to mean that the Liberal members would support it. I do have past commitments from the Bloc and the NDP. So with that knowledge, I'm going to just assume everyone is still of the same view and let my motion stand.
All right. Do all those in favor, do we need a recorded vote? Don't
Yes,
need
we
a
do.
record. Okay, we do,
Yeah, we do.
according to Peter. All right, Mr. Clerk, a recorded vote.
Miss Zerowitz.
Oui. Yes.
Yes.
Mr. Fraser.
Yep.
Miss Kotrakis.
Yes.
Mr. Cooper.
Yes.
Mr. Cumming.
Yes.
Mr. Morans.
Yes.
Mr. Poliev.
Pierre.
Yes, sorry. My Wi-Fi jammed up here at an inopportune time. Yes.
We heard a yes. Monsieur Saint-Marie.
Oui.
Monsieur Sainte-Marie, yes.
Yes, oui.
Yes, pour 10, 10, nays con 0. 0.
All right, the motion is carried and that motion will move forward. Is there any other business that anyone wants to bring up? With that, great. Thank you all. And we said, what day is today? We'll see you Thursday. Meeting adjourned. Thank you very much.